Hello, YouTube. I'm gonna need someone to give me a mic check. Actually, let me do it for myself quickly. Test. All right, that is beautiful. So if there's no questions, the first thing I'd like to start with is, since we're gonna be talking about stops a lot and the strat a lot, stops, where should they go? And everyone always has different answers. I have a couple different stops that I use, and for the most part, we default to the middle one, or the less tight one but not super wide one. And what we're going to show you is actually exactly that first. So if we're looking at an actionable signal, which not all signals are made the same, so we will talk about that later. But let's say we're looking at this actionable signal right here. We know our initial entry trigger for sure is going to be under 39289. And we know our target, which this was talked about on stream today actually, is going to be down here first. And the reason is because we had this outside bar, 2 down, 2 up reversal that hits its magnitude. Now we're coming back through this outside bar here. So we look for the bottom of the try. And if we were to just quickly go like this, go to a 5 minute, you can see your broadening formation much cleaner. So with that out of the way, we know this is our entry off of that 15-minute actionable signal. So our stops can be in 3 different places. When it triggers, your stop can be put right above that entry price, which if we go into like a 1 minute, we're going to put that trigger line in a thicker color. So right when this triggers, your stop can go extremely tight. And this is what Rob actually suggests right here. So just a couple cents or even directly above. The second price trades below the trigger, you put your stop right there. And the reason we don't do that, or at least the reason I don't do that in my own trading, is because I know I can give it some room as long as I am sized appropriately. So if I'm looking at this, we can see just based on this structure, we had lower highs, we swept this liquidity or created the top of this broadening formation, created a lower high right here, which is your TTO, and then triggered. So when I'm looking at this, I'm thinking my stop should be up here. And the reason it should be up here is because this is that lower high, this is the lower low, and we'd want to see that lower high hold. Because if that doesn't hold, then what? Then we have taken out the bottom of the range and we're coming back above to take out the other side. So if we know that, we know we can keep our stops tight, but we also know right down here probably isn't the best. Although you can do it, you will just have to re-enter triggers more than once. Meaning, if we saw this trigger here and you instantly threw your stop right at your entry price, you can see it comes back up on you. And then once it triggers again, if you just threw it right on top, you can see it comes back, hits you break even. And then a third time or a couple more times, you can see it triggers, comes back and stops you out for pennies. Triggers again, pennies, triggers again, pennies. And then eventually it comes back and it would have stopped you out again. So that gets extremely frustrating, especially if you're trading indices. If you're trying to go extremely tight stops and you're just learning the strat or just starting to trade, I would suggest trading gappers because you're going to have a lot more volatility and things will go instantly, which we will look at AMD, which was not a gapper, but will be an example of that. So if we go up to this 15-minute and look at our actionable signal, instead of having all those extremely tight stop outs, what we do, or what I do on average for almost all my trades, is I use the open or the high of that candle that triggers it. And the reason is because of time frame continuity. So if we're looking at this candle, we know below that open, sellers are winning. Sellers are more aggressive because it's trading below the open, right? And all of our time frame continuity is based around the opens, because if we trade below this and then back up, it's like, well, they're buying it, right? And if there's a 3 over here, potential 3-3. And that was something we talked about this morning as well on stream. So our stops should be based on that time frame continuity, just because that's the easiest way to do it and stay within the trades and keep your risk small. Which if we look at SPY, the stop is about 23 cents. So not too bad. And given that, we can go and look at the setup that actually failed into the afternoon. So coming into the afternoon, what did we see? Well, going into a daily candle, you're gonna have 2 4-hour candles. You will have, actually, 1, 2, 3, 4, 5, 6, 7 hourly candles if you're using, or actually is that 6? 1, 2, 3, 4, 5, 6, 7. Yeah, 7. 7 hourly candles if you're using the 30-minute open for your hourly candle open, which I believe is the bottom of the hour. I always mix up the bottom and top of the hour, but I'm 90% sure I'm right on that. So the bottom of the hour, the 9:30 open, you will have 7 hourly candles, which means we have 7 chances for that time frame continuity to change and also change around where that daily candle's going. So given that, we know second 4 hour of the day, we potentially will have a 4-hour actionable signal, which we can see that is what was set up. And give me 1 second. I'm going to throw our strat numbers on because you can see now what we're looking at. Let me actually turn on the 2s. So we can see we had an outside bar, a 3, inside bar 1, 2 up, and red shooter. And the reason this one is so important to me was because if we look at the daily time frame, the daily candle went 2-2 reversal right here and hit its magnitude. And the reason this is its magnitude up here is because once we go a penny above that, these 2 bars go outside of this bar right here. So technically, every penny above that, this is your broadening formation. And let's say it went even higher, you just redraw it higher, wherever it were to go. And the reason that's important is because once it has hit its outside day or its daily magnitude, if we go to the 4 hour, that is coming off exhaustion risk, which when you hit magnitude, you create exhaustion risk because you have stopped people out or taken out one of those previous highs or lows, depending on which side of price you're playing. But we know that stopped people out. And that's why, if we go back to that 15-minute time frame, this inside 15er shooter was super important because you can see 3, 2 down, 2 up hits its magnitude. So we know, just like on the higher time frame on the daily, when this 3, 2, 2 hits magnitude, this is your broadening formation. And we know this reversal off of daily hitting its magnitude is exhaustion risk, which gives you 2, 1, 2 reversal down, 2 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 up after hitting low a day, which was one of the targets. And now if we go to the 4 hour, we can see exactly what happened. They created the 4 hour shooter. And if we mark out our trigger was right here. And we'll mark that out in a different color. We'll do orange. So I pointed out on Twitter, and I'm actually going to pull it up quickly, just so you guys can understand my tweets a little better, because I know I get a ton of questions and I can't possibly answer all of them. So let's see. So this was my tweet. I said this inside 30s on SPY is important. Then I added, you can look at the H4 or the 4 hour VIX or SPY for why. And the reason was exactly what we talked about, that shooter 4 hour coming off of that daily magnitude, and it's a rev strat, which 3122 rev strat is a great setup because the outside 4 hour, this big move here, this is your broadening formation. So if we look at it, the second we start losing that previous day high here, then we're starting to come back through the trend. We can target this, we can target down here, and target down here. Now, what happened today, this is all important because it just didn't work out. And the reason it doesn't work out isn't important. What's important is keeping your stops tight, keeping your risk tight, because we know when this works out, it goes beautifully and it goes far. And if you were around last week, you're going to see, if you look at last week's price action at high of the week, when this 2-2 reversal on the 30-minute goes and it doesn't come back, and we have weekly and daily magnitude pointing in the same direction, it goes and it goes hard, right? So this just goes and goes and goes, never comes back to entry. This is what we're looking to trade. What we're not looking to trade is an inside 30 that goes down, then it goes green, and it's like, oh shit, we're underwater in a losing position, and then it goes 2-2 hammer reversal, and then we're like, oh crap, like double crap, right? And then it falls back in, then we're chasing it back down, and then it hits magnitude, and we're like, oh, maybe it's going, etc., and then it reverses again. And the way that you stay out of this is simply with the tight stops and understanding if it's not going to go, it's not going to go. And if we now look at this inside 30 setup, we can draw out, this is our entry, and important levels below should be logical levels. We have the gap fill, which you can see was actually the bottom tick of that. And then we have these levels. This would be that next area to target. And then obviously your 4-hour magnitude. And now if we keep our eyes to the higher time frames, because you don't want to get sucked in, we'll put previous day's high and low as red, just because that will make things a little easier to see. So our 4-hour trigger, we have potential outside day, rev strat 4-hour under 388.60. And we'll put that in black now instead. With this inside 30 triggering the 4-hour, the second that 4-hour goes in force, we don't want it to come back in, because the second we start coming back in, there's someone or something buying down here that shouldn't be, or we don't expect it to be there. And if we don't expect it to be there, this price is not doing what we want. And if it's not doing what we want, we don't want to be in the losing trade. So if we now go to the 5-minute, we can see this is our 30-minute trigger. And if we look for our 30-minute open, it is right here. So here's our 30-minute trigger on the 5-minute. You can see 3, 2 down. And if we fail and come back into this 3, where are we going? Way up here, right? Which is why we want to keep our stop tight, because if we start pulling back into this 3, we're going up here. And you can see they did go up there, took out the top of the 3, and then what? Went down, took out that low again. And this is where that new broadening formation started, which is how you understand and how you can figure out, hey, this is actually just not going to be going. So if we were being strictly rule-based and keeping our stops here, this would have been a stop out for a loss. And the reason we didn't stop out for a loss today was because, first of all, because I couldn't just sit here and babysit it. I wanted it to go instantly and stay under that 4-hour trigger. Because if it wasn't, then we know, again, it's just not going to work. Let me take some water quickly. So 3-2 on the 5-minute goes all the way down here and fills that gap. When we see this big red candle, which it was big red candle, right? When you see that after an entry, your stops should be either break even or in profit. And the reason is because when we're right on direction and entry, we are very right. And the reason again is because of all those higher time frame things we just talked about. If the higher time frames are pointing a certain way and we can take a low risk entry and it goes instantly, move your stops to break even. Because if the higher time frame's going where we expect it, it should not come back into that. And again, I could pull up a million examples of that, but it's kind of it's almost a metaphorical truth, because yes, it can stop you out and it can go there. But the ones that go there and go even further than what we're expecting, or even further than most people expect, are the ones that do not stop you out. So sometimes you may take a stop and it may go to where you want it to go. And that's where it's like, yes, you can re-enter, or it just happens, right? You're not going to hit every single trade. But the importance is having rules that will keep you in the winners and keep you out of the losers and holding on to them. Because if you entered short here and you had your stop on the opposite side of the range, the second it fails down here, it's going straight to your stop loss. And then you extend that out in time. It's like your stop loss is the entry liquidity for people that want new low a day. So we know not to just throw them above super far highs. Although it's like, yeah, if you threw it up here, sure, you got more. But then what happened? They come back and they took out the other side of the range. So it's like, it can work, but when you have this failure down here, we know it's probably not going to make it all the way down to our targets right here, just because it's not doing it. And it's stupid as it sounds, it's true. So when we saw that, I moved my stops break even, and I got stopped out on this fiver here. And then I saw this one go, and I was like, that's a shame, right? Then it came back in, and everyone was all mad about it. Now, let's say we wanted to get a re-entry into this. I was not around to trade it, but we can talk about it. Looking at this price action, we're going to extend that 4-hour trigger. And this is previous day high. So first things first, previous day high, this is important. And I actually mentioned that. I don't want to pull it up. You're going to have to take my word for it. But we mentioned previous day high, 390.39 is important because under previous day high, we have potential outside day. Above previous day high, we no longer have potential outside day. And if you were paying attention this morning, you're going to notice we traded above previous day high. We did not fall back below it, and then we traded higher to give us daily magnitude because they're above previous day high, right? Now below it, potential outside day. But you can see they go and they squeeze out everyone back up here. The reason they do that is because, first of all, this failed. So we already know that initial entry that was beautiful just didn't work out, so we probably can ignore it. Secondly, we now create a try, which you need to be drawing these broadening formations on the lower time frames and the higher time frames because it's so important to know. If you don't know where your range is on a lower time frame and higher time frame basis, you have no clue where price is going. And I don't know the exact terms, but people call it getting sucked into the vortex. And the reason that is because it's like you don't know this is the bottom of the try back here if you're not paying attention to this range. And if we look at it, we have our higher highs to these highs. And we had our lower lows back here, which does it hit the perfect bottom of the try? No. But how do our broadening formations work? And this is one thing I've had questions about on Twitter. It's like, how do you draw them? It's like all you do is you start at the right. So if we're looking at this and we just got stopped out of that 4-hour attempt short on the 30-minute, if we're looking at this, we're thinking, okay, here's a lower low to this low, and they come all the way back up. If you wanted to draw it like this, you could, because this is an outside bar here. But we're going to do it like this. We're lower low to that low. This now comes and takes out what? Takes out all of these highs to the left, not that one. Takes out all of them, and this one. This is that last high taken out. So if we draw from right to left, we only need this line up here on the right to be like a penny higher than whatever's on the left. Like even this, so you can see, this is a line going downward. Can't have that. We need to be at least a penny higher. And if we now, you can see, if you drew it out here even, it comes up to the top, and then what? Inside fiver down, shooter. Inside fiver again, shooter. Boom, goes instantly, right? And now, where's the other side of the try? If you're drawing from right to left, this is that last low over here to actually take out lows right here. The second we trade below this low, that is the other side of the try. It doesn't matter how many twos go to the downside over here. It can go 2 down for the next 3 hours and then get a 2 to reversal up. You would just have to redraw the try way, way down there, right? So once we get that new low, this is exhaustion risk because we've taken out the high of the range, taken out the low of the range, right? Now we are 4-hour in force, but what do we have if we go back to around the 15-minute? What do we have back here? We just filled our gap on the 15-minute, which people treat gaps differently. I use all the different time frames. So if you're looking at the hourly gap, you could have that level too. Doesn't really matter. But the importance here is even if you took this inside fiver down, or this one here, or let's say you took this 212 and stopped out, no matter what happens, once we hit this low, we either are going to expand this range lower, which means we don't reverse back up and we don't hit our entries that were up here, or we are going to come all the way back through. And knowing those two opportunities, or those two options exist, this is how we manage our risk. So if we're looking at this, let's say this is our fiver short. If you're using the continuity stop at the open of the 5-minute, you can see it doesn't get hit, and then goes inside fiver again and gives you another short with another continuity stop, or you can use the high. Doesn't matter. Let's just say we took the second one. So if we took this second one, we have to have our targets in mind. Your first target would be this low over here, and your second target's way down here, the bottom of the try. And the reason we do our targets like that again is because the second we trade a penny below this low here, we are at exhaustion risk. If this is going to continue lower, this low will not get traded back above. We will continue lower. And if you know ICT concepts, you know the breaker, right? It's like people are looking at this as your breaker. You can look at it the same way, except you want to use that low back here. Or you can use the candle opens if you want to, that's fine. But we're going to use that low because that low is important. So if we're going to expand this try, if we're going to further magnitudes, we're not coming back above this. Which means if this is our entry right here, our entry now turns into our stop. This is our target 1, which turns into our what? This would be your partial or first take profit. And I know people, you want to add to your winners. So I'll address your question in a second, MC Whoops. and I can never say your name right. I apologize. I should have it by now. But second we traded penny below that, that should be a partial, and our stop is now our entry, because if we're expecting this range to expand, then it should expand, right? It should stay below this low and it should continue trading lower, which I'll pull up an example of that. But it should do that for sure if it's going to be a big winner. Now, what happens? Big outside bar off the bottom of the try. One thing you want to note is big outside bars, or just outside bars in general, those show aggression. So wherever you're getting them, there's aggression, because they bought it up and then they sold it down, right? So we can see aggression off of that previous day high, and then they sent it lower to take out this low. And we had the aggression here, and then they aggressively sold, and then someone else came in aggressively, brought it back into that 3 and sent it higher. Now we have a big aggressive 3 off the lows. If our entry is to our stop and I see that, I'm like, okay, well, for sure below my entry, because I don't want to take a loss on anything that has gone, what, a 1.5 in our favor, 0.4%. You should not be taking a loss on anything that does that, because we know if we're aggressively back down into here, just like the box setup, aggressively down, and then this aggressive candle back up, we know that's what happens at the bottom of the range or the top of the range if they're going to try and send things either which way. Now, if we go to the next candle, you can see if you kept your stop, if you kept your stop at your entry, you're happy. It's like, okay, well, here's your breaker block. Awesome. Next. Now, what happened? We tested that low. If you're using the box setup, it's like, you know about that. But let's say we're just doing pure strap. They're unable to get back below these lows and expand the try. That's no good. And we're about to get 212 potentially to the upside. So instantly I'd be thinking, well, I want to stop out here, or at least, again, make sure my stop is at break even. Now, trades into our stop loss, goes 212 up, which this could be an entry long, and you could close that position, or again, you can just stop out. And we're coming off the bottom of a try. And where is it going to go? Probably up here. One thing to note, we're still below previous day high. So if someone were to be bullish down here, it's like you need to get back above this, right? And if we're not back above this, then what happens? We're coming back to the top of the try, and then we're going to come back through it again. So if we play it through, they come up here, and then what? Top of the try happens. We're right at previous day high, and what do? They don't come back through. There's no reversal. And if there's no reversal, there's no reason to exit. And then you can see they expanded a little into the close. Now, going on to the 4 hour, what happened? They took out 4 hour trigger, and we had lower time frame entries that obviously lined up, and the lower time frame broadening formations that added up to turning this into a potential to go 3. And the reason that happens is because outside bars exist, and if you know that 2s can go 3, you have to have your stops tight. Because now if we go to like an hourly, yes, 2 to reversal on the highs, 2 down, 2 down, 2 down. You can see new hourly continuity. That gives it the ability to expand out of this try, because it has magnitude here. And the second we're back above previous day's highs, we're also back above daily open. So they're no longer selling. And that's what you saw at the close. Or if you look at this, the second they're able to get back above that, you can see a 3 aggressive, and then 2 aggressively back above. The second they do that, they just take it off, and they rip 4.4% in less than 4 minutes. So very important things to know about. And obviously this single stream isn't going to help you guys immensely, but hopefully it can answer a couple questions, and that's what we're going to be talking about now. So MC whoops, you're good. You did include the 2 to 2 on the bottom with the 2 to 2 on top. I just thought you'd want the BF to start with the 3 below the red line. Yeah, and I forgot to mention at the start, I know I haven't streamed in a while. I just wanted to stream and see if you guys were still out there. And it looks like we still have a couple friends here, so I'm happy to see that and happy to have you guys on. But so with redrawing broadening formations, this is all you need to know. Let me clear all of this out. So ending the stream today in premium chat, this is what we talked about. We go on the weekly. Okay, weekly broadening formation, weekly basis, we're above weekly open. As long as this is the case, as long as we're above 381.81, weekly broadening formation, weekly try is to go 3-3. Why? Because you have 3-3, potential 3. So draw from here to here. Can you draw it all the way back here to include that? Sure. Can you draw this all the way back here to include that? Sure. All that we need to know is we have taken out one side of the range and we're coming back through. Depending on how you draw it, obviously you can make the range look different, but we have to just identify the range we're trading in. And if we'll just go back and we'll draw a couple of them. So let me turn off the 2s and 3s just because we'll actually turn off the 2s. I wish I could make them smaller. Sadly, I cannot. So if we're just going through this chart, you should be able to pretty obviously see it's like ignoring anything over here. Just what is the current price action doing? You had this trend lower, you made a high, you made a low, you made a lower low. It's like, okay, lower low. That's interesting, right? Because we instantly want to connect that. Okay, it's like, well, this high, what did this take out? It didn't take out any of this stuff. We continue drawing. It's like it took out that high, took out this high, and it took out that high. It's like that was the highest high it took out. So this is our try. Now, what happens up here? Technically, did it tap the top of the Browning formation? No. What did it do though? It went a penny above this high. Penny above that high, top of the try. The other important part is what did it do after? It gave you a reversal signal. So once we see that 2 up in red, we know, hey, they're trying to fail this side of the range. Now we draw, you can see that previous high out. If we're coming back into this outside bar, or you could draw it like this is all outside bar of everything to the left inside that Browning formation. It's like you can actually draw it all the way up to, let's see, you can draw it all the way up to this high if you want it. Doesn't really matter. All we need to know is, hey, we've taken out this high, and if we fall back below it, we are trying to fail one side of the range, which if we now draw it from there, we took out that high, you can see they fall back in, we're trying to fail that side of the range. Now, given that, our big home run trade, our big swing, what would it be? It would be down to here. Does it mean it has to go there? No. Because what can happen? They can fall in here, and they can start a new Browning formation. And then what do you get? You get quarterly continuity change. And then what? It's like, well, then the Browning formation expands in the direction of the quarter. And it doesn't take out that low. It's like, oh, man, that sucks, right? But that just happens. And we have to look for those Browning formations to form, which you're going to see. We pull back in, fail the high of the range up here, and then what? We have 3. We have 3. And then what? 2. So 3, 2, we'd look for the bottom of that try. And then we get a penny below that. This weekly closes right here. This is where we redraw because, boom, now we've taken out both sides. And then what happens? This one trades outside of the try, which do we technically redraw it? Yes. Do we have to? No. We just know for a fact, bottom of this try, anything at the bottom here, this is the other side of the range, right? And if we look, we get 2 up after taking out the low over here, so technically failing one side of the range, coming back higher. But what happens? It just doesn't work, right? And that's fine. Someone's trying to sell up here and they're wrong, right? Are they short-term right? Yeah, sent it to a new low. But what happens a week later? 2-2 reversal, boom, boom, hits the high, and now they're trying to pull back into this range. And then what? They TTO, they go 2 up in red, 3. Then what happens from the 3? You draw another try because you have a new outside bar range. And then what happens? It goes 3-2, 2-2-2. And do we come back to the high of this range right away? No. We take out this high back here by a penny, right there. And then what? Reversals back down. And then what did this do? This created an outside bar. So once you have another outside bar, it's like, okay, this went a penny above this high back here. Now this low took out these lows. If we fail this side of this outside bar, we're going to this high. Instantly, that's what we think. And one thing I'd like to pull up is SGIM. What happened this week? I said at the start of, or end of last week, said SGIM, definitely want to know about that because it's an outside week. If we fail the highs, then we go to the lows, which has it done that yet? No. But what did it do? Gapped up on Monday and then went red back into and towards this outside bar. So it's like instantly we redraw it. It's like it would be drawn like that at the beginning. Yeah. It's like the second we go a penny above that, which you can see we did it here and then gapped up. This is the top of your try. Now we have the continuity red on the week coming back in. Daily reversal right here. So we have to think potentially we're going to the other side of this range down here. And if we go to SPY last week, it was the exact same thing. And if we now draw it out, did we have to redraw it to this high? No. Can we? Sure. Boom. There's your try, right? 3, 2 up red on a Monday. Tuesday, reversal. Why is this one important on Tuesday? Because it's turnaround Tuesday. Monday, they tried to bring it higher. They're failed. 2 up in red. They failed that side of the range. Tuesday, this is where they try and bring it in. And boom, they bring it into daily magnitude. When I see something hit daily magnitude, and if we go on replay mode, when I see something hit daily magnitude and it has week and month continuity, I instantly think, where's the week and month going? Because if the day hit magnitude, they are selling it. No one would tell you that they bought on this day, right? So we know they are selling it. Where's the week and month going? Because we know they're selling on the daily now. Where's the move going to continue towards? You go to a weekly time frame. Obviously, it's going to skip. That week was right here. 2 up in red right there, back into an outside bar, back into the try. So the week is going way down there. Boom. Now, where's the month going? Let me remove some stuff. The month went inside and up and 2 down. We'd want to see the month down here, which I don't know if we play this through or if we exit it. Yeah, so we'd want to see the month down to this low. But we go into a daily, what happened? We still have targets in between, which we had this target here. We had these targets here. And those targets are important because this is where, if they're going to fail aside of the range, this is partially in that range, right? It's like from here all the way up to here. This is all outside bar of this one candle right here, or these two, right? So technically, this is the bottom of a range, not the bigger range, which if we go to Bitcoin, you can see why that's important to make some sorry, let me get some water. I can't speak. This is why it's important to make that, I can't say the word, to make that distinction between the two. Because you can be at the bottom of a range, you might not be at the bottom of the range, but depending on time frame, that can still work for you, and that can still be traded. And if you looked at any of the tweets I posted, I believe it was last week with Bitcoin, it's like, here it is, boom. Here's the highs of your range, here's the lows, and then what? I just redrew it to here. Done. And maybe draw it to like this low here. Done. So it's like we're at the lows of the range, the big range, right? Now we go on to the daily. It's like on a daily basis, technically we went a penny above this high here. And when we started failing, it was like, okay, here's an initial target. 312 week hits its magnitude. What's important now? That we stay out of that 3. Because the second we trade back above that 3, where are we going? The other side of the try, right up here, right? And what happens? Daily 2-2 reversal. Everyone thinks the sky is falling right here. Daily 2-2 reversal. Hammer and force. Did it go instantly? Maybe. Takes a day up. Doesn't retest it on the second day. 2-2-2 magnitude. Top of the range. And can they reject from here and go all the way to the bottom again? Sure. Give me an actionable signal to do it. If we go to the week, one thing is your week has what? Exhaustion risk. So when you hit exhaustion risk, you can try lower time frame shorts, which exhaustion risk, hourly, inside, outside bar, so might have screwed you up a little there. But this is a compound inside bar. This bar, this bar, and this bar. All inside. This one is the 3-2 that goes inside bar, 2, 1, 2, and down. Which if we look at it, this would be your 2. This doji candle. This whole thing's your 1. The second this candle breaks that low, this is your 2. And you can see 2, 1, 2, 2, 2, and then they TTO a little bit, doesn't come near entry, and they took out T1, which would be that previous low. And is that the other side of a range? Yes. But does it reverse from there and go to our entry? Who knows, right? And if it doesn't, then we want to see what does the day do? Because the day can go shooter reversal and give us magnitude to here. Doesn't mean the day has to go all the way to here that same day. Technically, no. Just gives you the fact that you're failing this high. Because if we're looking at what a reversal actually is, we had yesterday's range. Daily reversal is just failing the high of yesterday's range, right? And then we go to the low of it. And that's how every single strat reversal works, which is why they're the highs and lows of previous candles. Because if you look at it, it's like, here's your 2-2 hammer reversal. This is your range right here. And then look, wick closes back in the range. 2-2 reversal, back into the range. Continuation, back into the range. Target 1, right? And if you just continue going up on the time frames, you're going to see they continue failing and going higher. It's kind of like being, it's kind of like working in the government. You can fail upward, right? So just ranges to find liquidity. The broadening formation will give you the draw. It will give you where prices are going. Does it mean prices have to go there? No, we're not always 100% right. But what it will do is, again, kind of not a metaphorical truth because it does happen, but kind of like a metaphorical truth where like treating a gun as if it's always loaded isn't true because the gun may not be loaded, right? But it does save lives, okay? So now if you think, hey, price takes out both sides of the range, is that always true? Does it always take out both sides of the range? No. But when it does, you're extremely right, and you got it from the bottom to the top, right? So that's the important part. And if we go and just zoom back on Bitcoin, it's like, okay, what happened over here? It's like, well, here's your range. You have the high up here, you have the low created here. We went 2 up, we went 2 down. It's like, well, where's that going? Probably here. It's like, okay, now this one fails this side of the range. Where's that going? Ideally, it would go up to this high, right? And then what happens? It doesn't. It's like, okay, well, wherever your entry was in there, it just didn't work. But if it did work, you're going to make a lot of money, right? Now, if we now go look at it, it's like, well, big outside bar 3, that shows aggression. Here's our lower end of the range over here. What happens? They close outside of it. So they're no longer trying to go back above these highs because they're not failing it. They're actually expanding the range lower. So they close outside of it. You can see they test it. And then they go 2, 3, 2, 2, 2, 1. And then this is all mother bar. And then what? They create a new range. And you can see, I believe this was one actually posted, but it was a very long time ago. It was in 21. You can see mother bar. All of this stuff gets stuck inside. This is your only range you have. They take out the lows. They test the lows. They don't fail them. They test them, come back through daily reversal, and then what? They go to the other side, right? And it's like if you took this inside one or up right here, expecting this high, is that wrong? No. Was it a trade that just didn't work out? Yes. That's the difference you need to make. And I think MC Wups, you need to tell me like the phonetics, how to say your name, because I feel like I'm saying it completely wrong. But I think that's what you need to work on personally, just from what I've seen on Twitter and the things you've asked me, is you need to work on just either it works or it doesn't. And obviously, not every single trade is going to work. And another thing with the strat that is extremely difficult, just in general, is being in the right place. Because MC, perfect. But being in the right place. And I say that because you could put the best stratter in the world on the wrong ticker and they will lose money because they'll just stop out all day. And a rule that I have came to use to get to hopefully like not do that is my 2-stop rule. If I stop out twice, because I trade about the first 3 hours of the day, if I stop out twice, I'm done with that ticker. And it doesn't matter what it does, I'm just done with it. Has it cost me money in trades that I may have won? Sure, maybe. Has it saved me from over trading and killing my account, stopping out 60 times in a row? Yes, it has, right? And now, for example, what did I do today? So, first off, I would like to, I'm not going to pull up my full bank account, but I will pull up my executions from that 30-minute trade we talked about a second ago, as long as the orders are still there for me to look at. Yeah, so here's your executions. So this was from that SPY inside 30 trade. You can see bought the SPY puts at 144. I bought 4 of them. I put in a limit of 5, so it's more of a market order since SPY is very liquid. Spent $466, so about a $2,000 trade. What happens? Again, it went down. I moved my stop to my entry. 389 put, sell to close for a penny. Pays for my commissions. And this right here, this is that gold mine. Because as long as you can do this and not let things go against you, you can't lose money. And will you sometimes lose money if you mess up executions? Like, yes, you're a person. But as long as you can get that under control, even if you're not a true trader, like you can't actually find the setups or be in the right place at the right time, this is what will do it for you. Because then you can learn, you can figure it out, and you can learn from your mistakes without losing all of your money. So that is one thing I want to show you. And then the other thing is AMD. This was on our watch list today, and there's a couple of reasons. Full time frame continuity, potential outside week. Monday went down and failed. What did it do? So if we draw it out, here's last week's low. What happened? Went down, failed it, closed back in the range, right? Instantly we're thinking, boom, potential outside week, full time frame continuity, right? Daily trigger, daily actionable signal. We're on a 5-minute this morning. The second we trade above that, we are expanding that daily to the upside, right? And if we go look at the weekly, we instantly know our target because it's potential outside week right up to these highs. So those were the two sides of the range. You can see 3, 2 up fails back into this range, 2 down, magnitude, 2 down again, bottom of the broadening formation, and then 2 up, back through the try, boom. And the reason this one is way more aggressive than this is because this is all people trying to short an uptrend. This is them turning those machines, buying them back on, or rebuying the stock or buying again, because they're grinding into these highs. There's no aggression because everyone's long already, right? Once you stop those people out under this low and this low here, now boom, they're gonna have to buy back in, and you get this really big candle. So if we go to the lower time frame, these were the entries on stream, and it was a very simple one to trade because, again, you trigger, enter, goes instantly, stay in it. Like, that's where they're going. And we know what? If this goes instantly down here, they're buying it down here for sure. The weekly outside bar is way up here, right? And as long as we have that, what's the word I used prior? As long as we have that belief of, hey, we take out one side, we took out last week's lows way out on Monday over here, and you can see it's like, boom, aggressive sells and then aggressively back into the range. This is the box setup. It's like, here's aggressive down, aggressive up, or here's your fair value gap, right? Done. Outside week, shoop, right back up. It's the same exact thing. Now it's like, we're buying here for sure. Outside week is the only thing we can target because that's the other side of the range. So understanding that, we want to add to our positions. And we took that initial entry. I believe I actually entered it late. It was somewhere up in here. Then we went 222. We did come and hit 85.45. So I said, hey, we're going to take a partial. We're going to move our stops to even, and we will add to every single trigger we can. And sadly, I didn't get a million ads on it like I wanted, but what do we have? Inside a fiver, didn't reverse, goes 212 up continuation. What does it do? It hits its magnitude right away. When that happens, instantly your stops on that add to your entry, your stop goes here, because this should not get hit if they're aggressively buying to last week's highs. And then we go what? 1, they go 2 down, right? But we had our aggression. This 2 down, they're stopping these tight stop people out who are buying this breakout of this high. They're stopping those people out right here. And then they go 3, and then 2, this one fails, and then 2 up again, Momo hammer right here. And then 2, 2, 2, 2, 2, and you can see they go all the way up to the highs, and look at dump. This is them taking profit. And when people talk about like accumulation and distribution, which I've posted about on Twitter many times, this is last week's highs. What are they doing? You had the sell, they tested the 50% of that wick, they sold again, they broke structure, they made the lower high, they made the lower low, they made a lower high, swept liquidity, and then they expand the range lower, right? And where do they go? They filled the fair value gap that was left here. So it's like it all lines up and it all works, and it's like, okay, well, they distributed their positions up here, they took profits, right? And I bet if we pulled up volume, there wasn't much, but they took their profits up here, brought it back down. This is where what? We go to the hourly. They took profits, they brought it back in, and then what? Boom, they're coming right back for it because we're still way above the weekly open. And one thing we're going to have to look for now is, can we stay back above these highs over here? Because as long as we're above 87.81 on AMD, we're not falling back into the try. Because the second this goes outside bar on the week, this is now your broadening formation. And what do? We draw it. Boom, high, low, done, right? Very, very simple. And let me redraw. And it's like, okay, if we were to come back through, how would we have to do it? We'd probably have to go outside bar of this candle here if we were going to do it. But that's hoping for a lot because we're full time frame continuity. So what do we want to prefer to see? We want to prefer to see an expansion of that try. Because now we're 3, we technically won't be going 2, but we're expanding the range. This 3 is going to get bigger. And we do have this liquidity sitting above here at 88.94. So I would want to see that. So now I will answer, what are your favorite setups? Recently, or I guess not recently, but focusing on the 3s. Just because it makes it really simple, because I'm talking about tries and drawing them for 3 hours a day anyways, and I'm doing it for a couple hours every single night. The 3s are simple because you can scan for them. So if you want to scan for broad information, scan for the 3. And if you want to scan for things that are going to move aggressively in the future, scan for a 3, right? Because instantly the 3, it tells you 2 things. It tells you, first of all, hey, we took out both sides of the range here. So we know broad information, right? Instantly. Secondly, it tells us, hey, we have 2 points of interest. We have the highs here and the lows here. Can they do different things once we reach up there? Yeah, it's like you can fail it or you can go through it and expand it. Those are the only 2 options. So you can see this 3 shows up, boom, it goes 2 up and fails. What happens up there? We'll see. You can see right at the open, it goes 3, 2 up, 2 down, boom. Right here, there's your 15er down. If your stop's at your continuity, awesome. One thing is this thing did, what did it do? Came back in. So does that stop us out or not? Depends on the trader again. If you're going to move your stops early, you can. That would stop you out and you'd have to re-enter this. And then you get your first partial down here. And then if we draw that out, that entry does not get hit. And I'm not sure if it, yeah, then boom. Outside bar gets tapped. Now it's like, again, bottom of the try again. If we continue, now we have potential 212 back through the range because this is our range. The second it triggers, it'll be coming back through. So these highs instantly become interesting. Triggers and fails, right? And if that happens, that's fine. Where do we have our stop on that? Right at that 15-minute open, right? And what else happened here? They did not make a new high. So we're still actually inside bar. And again, you have to take the losses as they go. So now this is potentially inside down, which is against our bias because we're at the bottom of a 3, right? If you're going to play the expansion, you can, but we're inside week, inside month. We're not going anywhere, right? Now we have potential. Technically, this would be something like this. This would be all 3 of these inside bar. Or what happened? We had the 1 here. We failed that high, right? We took out the low. So what? If we go to like a 5-minute, we technically are outside bar of that inside 15er, and it would be something like this, right? And that's where you can get those lower time frame 5-minute entries because here's your 225er off the bottom of the range after taking this liquidity here and here. And see, and you can see your 225er right there goes, right? Never comes back to your entry. And then what happens? You had your 15er, which this one was a mess probably. Now we get to the higher time frames. You have double inside on the 30 at the bottom of the range. Fails to go, so that would have stopped out the fiver. We're still waiting. Boom. Inside 30 and up. That one goes instantly. And next day comes in, and we can see, or actually it's the latter half of the day comes in, and you can see big ol' outside bar back above. Now it's like, here is your range from these highs now to this low and actually this low. And now if we skip to the next day, they go 2 up. TTO again, still what? This is our outside bar. This is that top of that range here. They're still expanding it. They're failed to come back in. And that's what made that big aggressive move up higher. Then you can see they go 3, 2, and they're taking out liquidity over here. So I wanted to ask you about what your thesis was with that inside 30, but I know it sounds annoying sometimes with follow-ups. We filled, gapped, and bounce. If you were here at the beginning of the stream, we talked about it. We can quickly go over it since I know there's probably some newer people in here. But if we go to SPY, we had 312 shooter actionable signal. Daily magnitude is right here, so exhaustion risk. And we actually did this morning call out this inside 15er right here. We called it down to these lows here, and there was no 15er against until low a day, which is right here. So that was part of it. And then we had the inside 30 to set up potentially that 4-hour reversal, which, yes, did a gap fill and bounce? Yep, right here. But we closed that out for break even, because if we go back to that 30-minute, this 3-2 triggered that 30-minute. The second we saw this hammer and this hammer triggered, I stopped out break even for about a penny gain on my contracts. So I've been making it a rule not to get into a play if it triggers and it's turning into a 3. It can come back in after expanding, and it may give a 3-2 continuation, which isn't recommended. Thoughts? 3-2 continuations are underrated, in my opinion. And given that it's a 3, they're harder to trade, but if you know when to trade them, you're going to do a lot better. And I would have to say, when can you trade them? You want to be trading off of low a day, high a day, or previous week high or previous day high, anything like that. So as long as you're coming off of higher time frame highs or lows, trading the 3s is going to be really useful. And the reason is because this failing up here and coming back to this low, this is failing that side of the range coming here. It's like, okay, where's the 3 on that? It's like, well, we can't really see the 3 here, but we go to a 2-hour. It's like, what happened? Oh, this one actually didn't do it. Was it NASDAQ? It might have been NASDAQ. Yeah, so NASDAQ actually did it, but it didn't do it all in one candle, but it's very useful. It's like first 2 hours buying. Yep. Here's your range instantly. Boom. First 2 hours of the day, that's your range. Now, here's the 15-minute. If you know that's the higher range and you get a 2-hour flip, this 15-minute reversal may have stopped you out. Who knows? Depends on where you move your stop. But if you use your continuity entry and you're playing off the high of this range, probably didn't. And let's say it did. Where's your 3-2? Right there. And what does it do? It takes out all of this pivot machine gun down here, where you have these clustered pivots. And the second I would see like this hammer candle, I would be terrified. So we'll see. Doesn't come back to entry. Goes 15 or 2-2 back down. Takes out low a day. And you can see 2-hour, that's exhaustion risk. 2-2 reversal here, takes out low a day. And what else do we have? Previous day high, which is a 3, right? So if we're expanding this 3, we shouldn't trade below this 3's high. So we go to the 2-hour. We have our exhaustion risk right under low a day, which is right at the previous day's high. And it's really a question. Do they come below this low and stay below it or not? It's like, okay, first 5er up, perfect. Try it. Doesn't work, goes 5er against you. Okay. That 5er didn't really set up for us. And let's see, they give us 15er or something. So they're trying to go 15er hammer, maybe a 10-minute. There's different time frames for different things. People will figure out their ideal time frame. Okay, this one did not work. They took out the lows again, but again, what's the question? Do they stay below this previous day high? Because if they can't stay below that, we can't target potential outside day. Because we're not going and failing that previous day's range, like we talked about with the previous candles. This is previous day high. This is previous day low. We cannot fail the high if we're not below it, right? So again, where's our try? It's like, well, when Q's bounced here, our try would have been something like this. And then once we came back into this low again, our try is something like this. And we had this 3 here, so we know this lower time frame broadening formation exists. And now we have potential 15er to come back above that previous day's low. And 4-hour was 2 down here, and trying to come back into that previous 4 hours or the 2-hour range, depending on what you're looking at. So we'll see, does the 15er go 2-2? So 2-2 15er back into this 3. So we want to see that high taken out. Did hit its 15-minute magnitude. And again, it's like, okay, long, the low or the open of that candle, either or. Initial target is your magnitude, or you can use that pivot, the high of the 3. And they took it out and they reached for, go on the 4-hour. potential outside 4 hour because they could not stay below previous day's high. So let's see. If we're talking about tickers, I actually will do my prep live here, I believe. But there's not going to be like a crazy amount. Most things are just going to look the exact same. So, how do you find tickers to play the next day? Do you just review daily setups? I will show you guys after we answer some more questions. I agree. When the market was melting last week, the threes expanding incredibly, and the 3-2s continued, incised out because of that 3-2 rules that's out there. It's really up to you. And the reason rules like that, I don't really 100% agree with, is because all of this is tradable. It's knowing when to have which rules, right? And the when to have which rules is really important because that's all just contextual. And it's not contextual in a way that it can't be. Give me a second, I need some water. It's not contextual in a way where people are like, oh, trading's 100% emotional. It's contextual in a way where you have to know what range you're in, which is hard. It's hard to program, and it's hard to obviously identify perfectly every single time. But if you know the context, then you know if you use tight stops and take low risk entries, when one of those works, you know exactly where it's going, right? And the context part is important because it's like, well, why do we know to take it short up here? Or why would we be taking it short up here? Even if, let's say, last week it just went 3-2 and just expanded without me, or expanded after us trying to short up here. It's like understanding why we should be trying to short up here is way, way, way more important than if it actually works or not. Because it's like, if it works, then boom, big reward. If it doesn't work, boom, small loss, right? That has to be the way it works. Because if you don't have these truths that sometimes are false, you're not going to have consistency because you have to have that consistent set. And now if we, let's say, go, it's like, do we have any threes to trade out here? It's like, okay, here's a 3 here. I don't know what our daily context is. Let's see. So we have our bigger range from the previous week. So we're looking at this day and this day right here. And we have daily T2 reversal like this that hit its magnitude. So if we're going to talk about this range here, this is going to be talking about your 3-2 rule. So if this is our range, because daily T2 reversal, this is your big broadening formation, right? Once you get that 3 on the hour here, you need to realize what? Look at the price, right? This is a chop shop. So the second you start stopping out in here, this is why I have my 2 stop rule. Because the second I would start stopping out, I need to realize, hey, I just stopped out twice, or I stopped out 3 times on this ticker. I need to reevaluate it. Like, is this actually doing anything? And it's like looking at this, here's the low of that range right there. It's like, okay, 2 up, fails, 2 up, fails, 2 up, they tried, failed. It's like, okay, well, they're not doing it, right? Then here's 15-year hammer, which actually I took this up. Then we hit our target. I took a partial, and then it stopped me out break even. And I was like, okay, we're done. I was like, we're going to wait for this try to expand. And it's like, why would we do that? It's like, well, if we went and looked at the daily chart when that was occurring, it's a doji. It's not doing shit, right? We want to trade days that look like this. And if we go back to this day here, I didn't short it right at the high. I didn't short it under daily trigger. I took it after it proved. It was like, boom, big sell. I was like, oh shit, guys, here we go, right? Here's shooter fiver right there. And then what? I actually didn't get to hold this whole position down because it came back in on me. What happened here? Another shooter fiver, and this one I actually changed my risk management a little bit. I used the high of this fiver because I was so confident in it. I was like, hey, this fiver, this is the one that goes. If we zoom all the way out, you can see, came back. This was our levels posted to Twitter. I was like, hey, up here, we're going to reshort the hell out of that. Why, though? Why? This is where it's important. We had this range here that was really tiny and choppy, right? That's the important part. And the important part is not that it's a consolidation, it's going to break out. The important part is it's a consolidation, and consolidations expand into broadening formations. This is why your consolidation breakouts don't work. It's why the box setup works. Because if we now draw this out, here's the high taken out, here's the previous highs, and if you want to draw it to this high, you can. Doesn't matter. We know now, this is, we go to the hourly. It's like, okay, I don't trade 3 2s. Does that help you in here? Yes. But do you need that rule to not trade in here? No, not at all. Because if you go to the lower time frame, it's all 2s and 1s, right? So we draw our tryout and we see here's our lower low to this low, here's our higher high to this high. Comes up here. Do you have to know about this level that I pointed out on Twitter? No, not even close. Doesn't matter. What do you need to know about? You need to know about this high back here. Because now we go 2 hour right here. What do they fail to do afterwards? They fail to come back above that high. And then what? Shoop, right into the low of the 3, low of the try. And then what happens? This range, although it's like, yeah, we expect it here, what happens? The larger time frame range takes over, this weekly try. And then what happens? 2, 2, 2, 1, 2. And this is what I was talking about before. This try, as long as it doesn't reverse here, this try, all you do is just redraw it the whole time, the whole way down. It's like here, boom. Doesn't reverse, boom. Doesn't reverse, boom. And then when you start seeing tries that look like this, you're like, okay, well, zoom the frick out. Where are we going, right? It's like, okay, well, let's zoom out on the hourly. It's like we're looking at it. It's like, okay, well, we have these highs back here. So here's our try back here, and then this is all stuck inside. So no shit, we started a new try, and it looks something like that. And then we expand out the lows of it. And it's like, can you draw it to this stuff? Yeah, but this just makes more sense to me, so I'm going to draw it like this. Done. Right? So it's like, here's our range. And if we now go to what today is doing, they what? They tried to take it below previous day high. They tested it. They failed. Hourly reversal against. Boo-hoo. Didn't work out. Where would it have gone if it worked out? Outside. Down here. Now, didn't work out. What does that tell us? Well, they tried to sell it down on Tuesday. Turn around Tuesday. They couldn't flip the direction. So where do we want to think next? Well, do we go to continuation tomorrow? Do we expand this try? These 2 candles are outside of this candle. Go to like a 15-minute. This is your try. It might not look like it, but it is. Because it took out new highs here, and we had a new low to this low. Done. All of this stuff here is outside of these candles. So, where are our levels that are important tomorrow? We have 2-2 reversal day under here. And I'm going to give you guys this here. So this is potential 2 up, 2 down day. What are we looking for on the higher time frame? Potential 3-2 week. What is going to happen under daily trigger? Well, what's below us right now? Weekly opens right down here. So if this is our weekly open, this is our important level. I'm going to make that, we'll make it red. Nice. So this is our important level. Why? Because, well, first of all, it's like, can we go all the way to the bottom of the try? Yeah. But what happens at the bottom of the try? Exhaustion risk, right? So if we get exhaustion risk down here and we come back above weekly open, we're failing the lows of this range. We're back above them. And we are full time frame continuity up on the week, which means we have all of the next day until Friday, right? Until Friday, it means above weekly open, you have till Friday for this week to stay green, which means what? You have all of the week to try and come back to the top of this try. You have all the rest of the week to try and come back to the top of that try, right? And that's why continuity is important, because if you don't have a green week, you're not coming through anything to the upside, right? So potential 2-2 day tomorrow, if let's say futures gap. I know we have some news and stuff this week, and it's obviously a very news-driven market. Anything can happen. 2-2 day tomorrow. We need to see it test that weekly open. We need to see it stay below that weekly open if we're going to expand 3-2 from last week's range. And if you want to draw last week's range, you can do that as well. So it's like here, previous week low. We will make that dotted, and we'll do it in orange and make it thicker. It's like, okay, previous week's lows, and you can see gap below, they came back above, they failed to expand below it, and then zoop, 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 all the way back up to highs. So this is also important. At previous week's lows, we have this fair value gap here. We have liquidity, right? If we can't fail and fall below previous week's lows, we're still green on the week. It's like, that's another buy opportunity. And then what? Instead of this bigger try from the daily, this all gets stuck inside. Because if we come down here, all of this price action from this high to this low would be what? inside bar to this and this. And we know inside bars do what? You start new consolidation, and then it expands into a bigger try, and then you get to trade the range. And you could trade it, if it doesn't go two, it's like you can trade it back and forth the whole time. And a great example of that, actually. So let's go to Boeing. Yearly, 12 month, two inside bar, two down. What happens? They fail this side of the range. They're trying to come up to this side, right? If we go to the daily, you can't see it just from this, but where's our try? It's like from here. It's like, well, it started really tight in here, and you can see all of this is stuck inside this. All of this got stuck inside this stuff. And they started in here. They traded. They took out these highs. They made a higher high. They took out more liquidity. They wanted people to think, hey, this is an uptrend, right? And then they fall back in, back below these previous highs. They go to the other side right here. Then what happens? They come back above those previous lows, which I'm going to actually draw with the tool. They come back above the previous lows. They try again to expand the range, but what happens? They failed to stay below it. You had a lot of good trade in here, right? You took that 3-2 on the day. You're making a lot of money. But does it hit your target? No, because they decided to reverse it. And with that, you're going to have monthly continuity coming in here right in October, beginning of October. And that monthly continuity, the monthly open being right here, you can see all prices above it. That changes your magnitude. Because if it goes green here, you can't take out this low unless it's red. And that's how you know not to hold on to that, because it's going green. Do you know if it's going to TTO and go back red on the month? No. That's where, again, risk management, break-even stops, and keeping your profit and keeping your money in your pocket is incredibly important. But then what happens? It's like they come back above, big outside day. What does that tell us? Aggression, right? So what do? Mark out the highs and lows of that range. Then what happens? You go inside. They actually didn't create a new try in here until 3. Took out the highs. They failed it, so I'd be thinking, hey, maybe 3-2 back into the other side. Then the next day opens, they go what? Back above the range, back above the 3. It's like, okay, we are expanding this range higher. 2, 2, 2, 2, 2. 1 fails. It's like, okay, well, we go replay mode quickly. Where's the month? It's like month, there's your magnitude. So if you took that daily, you can see it inside month and up, hits magnitude. Perfect. Things that hit magnitude likely go further. And we actually talked about this in, I believe in the Discord. This was one of our inside month plays a long time ago. It's like, okay, inside month, that normally goes further. Let's see what it does. Because it hit its magnitude. I'm just going to exit it. Boom, right there. It's like, okay, magnitude up here. What do? They test it. They can't fall back into the range, so they expand it. You can see target, target. They haven't hit these ones yet. And where would I expect it to go? Ideally up here. Does it have to? No, because this high and this low, we are going to get stuck inside and potentially make a new try, which what happened on the daily on Boeing? We have now started a new try because we are stuck back in the middle of that range. Very, very beautiful. So let's see. So if a daily actionable signal triggers but doesn't hit target for the day, do you look for an actionable signal the next day on, say, the 4-hour chart to take it to the target, or is the play dead at the end of the day? So talking about these ranges, I hope it's almost absurdly clear how that works. So let's just say we're looking at Boeing on this inside day up here. Actually, that one actually hit magnitude. Let's see. Like Boeing tomorrow, that's interesting. Market were to tank 322, that's super good, right? Because I would try and expand back to these lows. But I'm getting sidetracked. And when I say absurdly clear, I did not mean to like make fun of you, but that's my bad. Just bad choice of words. But I don't have anything that like didn't hit magnitude. I guess simply put, yes, you can do that. And the reason is because the daily magnitude or weekly magnitude or monthly, whatever it is, it's all based on the range, right? So if we're looking at this 3, it's like, let's say the bottom of this 3 is our magnitude. We go 2, 1, 2 here. Let's say this bottom right here, this is daily magnitude, and this is like an hourly chart or something. We go hour down, and then we open a new day or something. We get new hourly candles. It's like, okay, well, we can wait for signals to try and get back short on this, which this is a bad example since we don't get them. But it goes 2 down, hasn't hit magnitude, goes to continuation. It's like, yes, hold your position, 2-2 reversal against. So reason to exit if you're based on the trend. And then this 2-2 back down would be a reason to add, because that's your actual signal on that lower time frame into daily magnitude, which so like on the daily chart that you showed earlier, it didn't take the low, but it reversed off the daily order block. So back down here. So you're saying this right here? I guess this is a good example. We'll use this. So draw out your range, know where the range is, right? So takes out the highs, takes out the lows. Does it reverse here? No. Does it reverse here? Yes. It's like daily reversal. One thing a lot of people mess up with the strat, and one thing I would say, like, my biggest problem with the strat is actually exactly what this question's about. Daily reversal works here, but do I hold the position for tomorrow? Personally, me, I don't, because I just don't like swinging, especially with all this freaking crazy news, right? But can you play it continuation the next day? It's like, yeah, we're going up here. As long as we're still going up here, we don't have reversals on the daily against us, go for it, right? And let's say we do have a reversal. Does it actually reverse? That's important, because when we see this go back down, like, a lot of people ask, how do you know if it's a TTO or not? It's like, well, know your levels. So if daily reversal's right here and our magnitude's up here, do I want to hold for this, what? Do I want to hold for 30 cents on Boeing at the close in this big green candle? Probably not. I would just close it out there. But let's say you wanted to. It's like, okay, this would scare you because it's coming into that gap. It's going daily reversal down, right? But we never took out the other side of the range. So we need to think, hey, potentially they're going to TTO some people, which you can see it actually happens more than once here. It's an interesting one. But if we look at it, it's like, okay, they sold it down. We would want to see it reverse soon, right? And that's where time comes in. So 9:30, and you can see 10:30. So this is 1 hour right here. And then what? You get second hourly flip of the day right here. Hourly open, you can see the first 15 minutes of the hour sells. Second 15er comes in, negates it. And what is it? What is the setup actually? This is compound inside 15er right here. So 2, 1, these are both a 1. You compound them together. And then rev strat right here over that high. And why is this one more important than, let's say, this one over here? Because we've taken out that low and we expect prices higher. So if we have that, this one's the best one because we've taken out the low and we want to see it regain that low and come back through the range. So comes back all the way in. It's like initial targets. You have here, you have the gap fill. You have the previous day's high, which comes within a penny. Is that really going to be make or break? Potentially. But when we get really close to these targets, we want to tighten up. And when we say that, it's like you want to tighten up because if it does fall back in, if there's some type of hidden seller up here and they don't take liquidity right away, you don't want to let this thing come all the way back against you, right? And now let's say you were swinging. The second we start getting up into these areas up here, or even this high, it's like I would partial here or move my stops up from there and then try and partial near those highs, just depending on how aggressive this was, which you can see it's like all these twos, TTO, add 2, 2, 2, 2, 2, and then you get a shooter for potential take profit. Really aggressive, so I'd probably want to try and hold this at least up until like gap fill or this high, at the very least. But then if you're swinging, what happens? We get a new day open, and then this is where time and time frame counting is important. You have 3. So it's like someone sees this big 15er and they're like, oh my God, this thing's going to rip. It's going to break out. Like, look at these highs up here. It's going to break out right away. But why is this 3 right down here important? It's like, well, is we take out both sides of the range. So this one took out the lows, took out the highs instantly. That's your broadening formation like that. And I can't really go down too much lower. I think I can go to a 5 minute. It's like instantly you have a higher high, lower low. Then what happens? They reverse back into the 3, inside bar down, back into the 3. You have all these things pointing back to this low. So you need to think, well, if we were to go to this low, what would that change for me personally? It's like, well, I have an ad right in here. So maybe my ad went underwater at the open, but I let it because it was 2 down and green. So it's like if I have my ad over here and we're going inside 5 or down up here, I want to protect that because this is my position. I want to get out. And when you're talking about ICT and mitigation blocks and things like that, it's the same thing because I have a position here. I want to protect that, either buy more, which is what like people with a lot of money can do. It's like you can just add to it, right? Or if you're like a small trader like me or anyone else on Twitter, this is where you exit. And if it sells aggressively through, it's like mitigation. You can see this is where it gets mitigated, right? And it's the same exact ideas. It's just a different way of looking at them, and you need to manage your positions in a smart way, which happens to line up. It's like, yeah, mitigation blocks and order blocks, same crap, because people want to protect their positions or exit them. So now it's like, yeah, comes back in. I probably don't want to hold into all this drawdown because we should have just gone what? 2-2 continuation and expanded that range, which we didn't because of that outside 15er that went through on 2. And then what? They took out the lows, and we took out the lows of this 15er, and then what? 3-2 aggression, right? Aggressively back up. This aggressively back into the range. That would have stopped me out. And then what do? They make another 3. It's like, okay, well, if I'm bullish still, here's your 3. Also, what happens to be on the left over here? This is the low of this previous 3 here. So if I'm bullish, I'd want to see a reversal out of here, which the second this goes 3 or goes 2 down in green, it's like, boom. Here's your outside bar of this outside bar here. Take a profit up here, stop to break even. Then what happens? We draw out like somewhere, let's say our entry was in here. They gap below it, which instantly I'd be like, out, done, because I'm not gonna fuck around and find out, because you sit here and you try and find out, you're gonna find out and you might not like what you see, right? And if we just kind of start clicking through, we can see again they take out the lows, and it's important because what? If we're gonna TTO, we're not gonna expand through them. You can see 2 down, 15er down, new 30-minute flip. This is the second 30-minute of the day. 2-2 reversal, just goes straight up to magnitude, goes inside, continuation, and then here's your reversal, 3. If they're going to expand that 3 and go lower, they're going to stay below it, which we can see it does. And if you draw the open, it looks a little better. But if you're taking, let's say, this 3 right here, it's like, okay, 15er hammer. This one gaps that hammer trigger, so nope, no, not interested. Same with this hammer trigger right here, not interested, it gapped. This one goes 2 down, 2 up. There's no actionable signal. So I'm also not interested in that. Although you can, it's like you can long it. It hits magnitude. But now new 15ers, they come right back in. And then what do? They come to these lows. Do they expand them? No. 15er right here, actionable signal, coming back through the range, which if we draw that actionable signal out, it does not get touched afterwards. Winning trades do not come back to entry. And this is a great example of it because boom, winning trade goes right up to those highs and completes taking out both sides of the range like that. And now I bet if we play through it, it probably expands. And you see it take out the lows here, goes to the high, and this is all inside, so it gets stuck. And then they gap below, 2 down in green on the day. They're coming all the way back through, take out the highs again. So it's like this range now goes from here up to here, and then you expand it up here. Can't really get the drawing tool. You can see they ride it all the way up. And if they're not falling back in, which is these 3s back here, then they're not doing it. Now what happens? It's like you get nice reversals up here with continuity. Boom, right back in. Does it go all the way to the bottom? No. But daily continuity gave you this whole move here with earnings. And that was a gap up and sell day. And then you can see this big outside bar of all this price action in here. They fall back in, they create a new broadening formation, and they expand the highs. Joop, right back up. And then they take out the highs again. They fail it, giving potential short signals, and then reversals to expand those highs. And then they expand, TTO, expand. You can see the TTO here. They made some higher lows over here, and they just continue expanding. And they start a new try. You can see like this. So let's see. If you go further back, you'll see when it reversed off. Give me 1 second, Duke. Okay. If there's a daily actionable signal, okay. Answered that. Can it just go in the fair value gap? You're gonna have to expand on that question, D rest. Which time frame is best to use for stops to make the trade most lucrative? Tight stops, like on SPY, no more than 30 cents is what I would suggest. It doesn't matter what time frame it is. You go into like a 1 minute. If we know SPY, it's like here's your exhaustion risk right at the highs. Is it hard to get an entry in here? Yes, but can you? For sure. Like, okay, we took out the highs, potential 3. That could have been a short. Actionable signals. None of these were actionable signals short. Technically, this wasn't either, although it's 2 up in red. There's no shooter. And then what? Takes out liquidity, shooter, actionable signal right here. It's like, where's your stop on this? If you were to use my tight stop, it would have been right at your entry, right? If you're going to use the stop that personally I would use on this, I'd keep it just at the high here, right? It's like, you can do it off a oneer, but you have to know what daily exhaustion risk sits right here. So as long as you know that, you can go to the 1 minute. It's like, okay, as long as you know this right here is your daily exhaustion risk, you can play it off that oneer. You're just going to get stopped out a couple more times. If you go to the 15 minute, goes inside 15 and down. That inside 15er made you stop out, and then once it goes 2, it doesn't stop anyone out. Let me drink some water and I'll get to the next question. Do you take off on order blocks, or do you just look for moves that take liquidity, run the high and low? So this is the difference between ICT and the strat, and this is one that I think is incredibly important. Strat, first of all, we're thinking of like here and now, and second of all, we're thinking of high to low of the range. Which, do we get the perfect low and the perfect high every time? No. But if we're around and we have our tries drawn correctly and we're in the right place at the right time, yes, right? And that's why order blocks and stuff like they don't not work, but they technically don't make sense with the strat until you add the context of, hey, so we'll go to replay and we'll go to like the 15 or something. I know a 10 minute normally gives really good order blocks. So if we're looking at SPY, this is our try from last week that we shorted. Let's draw like this. If we know that up here we want to be short, can we look for an order block way over here? It's like, okay, here's your last up close candle, and my stop goes above this high. It's like, you can do that on every single high ever made, right? But how would I use the order blocks? I would use them on the price that's happening in front of me, because it makes more sense. If we know up here we're going to reject the top of the triangle lower, we want to play the order blocks that are giving that, right? And if we're looking at this, there is no really order blocks here. You had this aggressively up, aggressively down. They did close below it, but they did trade into the fair value gap. They just never reversed out of it, right? Now we go up again, potentially like a rejection block or something, but goes lower. Does it give you an entry on that? Technically, no. And depending on how you use your order blocks, everyone uses it differently. This close below these lows, this could be an entry short. And it doesn't look correct because most traders that use order blocks, they go like, they want to see this, right? And the difference is, when you, as a stratter, let's think of it this way. As a stratter, if we saw this high coming up, if we saw something like this coming back above these lows right here, we would instantly be thinking, take out these equal highs, right? So we don't want to think that way, technically. But can you use the order blocks? Yes. And close below and then retest that? Decent. If we go and continue lower, it's like, we want big up candles that go into sells. So here's big up candle on the oneer, turns into a sell that breaks some structure. Does it get tested? No, sadly. Here's another big up candle. Doesn't really get any displacement from it. Here's another up candle. You could use it. It's not the cleanest. Then here's 2 big up candles. It's like, here's an order block. Do we test it though? Technically, no. If we just kind of play this through. It's like just looking at the SPY, it's like you really don't have much to trade off of. There's not many order blocks. If we go and look, it's like, okay, here's one, right? You can use the whole thing if you want. You have the aggressive move up that takes liquidity, down to take out a new low, and then they go into the order block and they reject. It's like, here's the first one instead of up here, unless you're playing that rejection block up here, or even my favorite box setup, which was right there. If we're on ES, well, that's kind of funny. You can see my orders. But if we are on ES, we also don't have an order block here. But if we zoom all the way to the left, it's like maybe like a 12-hour or something, or even like a daily breaker, something like that. But it's like, that's so much hard. Like, okay, here's your low. It's like, here's your potential outside bar, or there's your outside bar try. Makes a new low. They come back to the range. They're unable to stay back above it, so they're expanding that range lower. Zoop, right back down. And what I'm saying by range is you had this candle here. These went outside of that. These candles went outside of all that, which again, let me draw it like this. The second we go a penny above here and a penny below here, this is compound outside bar of these two candles, right? Then we go 2, and then kind of just grind lower, which when you grind lower like this, what do we want to see? If we're expecting lower prices still, we want to see TTO, because grinding lower means people need to get sent out of positions for us to go anywhere else. So they aggressively go higher, test the bottom of this compound outside bar over here, and they can't get back in it. So it's like technically very similar to a breaker, right? It's just a different way of looking at it. And looking at it in ranges makes it so much freaking simpler, because it doesn't matter there's a volume imbalance here. It doesn't matter that you use this wick instead of maybe this candle here, because this candle is the big down candle that took this liquidity, and this candle is a hammer, so you want the midpoint. It's like, you don't need all that. You just need the range, because it just makes it easier. As far as like order blocks and stuff, I still do use them, right? But there's a time and place, and the reason that's important is because it's hard to pick the right one. I'm too by that trade. Yeah, so this is just what's it called? Paper. Again, here's my, this was going into last week. The short up here, and then I don't know what happened here, but I added to it, and we haven't done anything. So if you go further back, you'll see where it reversed off of. Take off an order block. By the time you find out your contract value is wrecked, I'm unsure what you mean by that, because I don't want to hold anything. Like if we go to AMD is the only thing I held today that actually, like, this is the only thing I held. I want to see these candles, because this doesn't wreck contract value. This isn't hard to trade. This is extremely simple. First 15er down was after we hit weekly magnitude, and we were just done with it. I was like, all right, that's our trade for the day, done, right? So if you're in the right things, you're good. And if you aren't in the right things, you have a 2-stop rule or something like that, tight stop it, get out, get away from it, go to something that's actually doing something. And it's like, let's say we go to AMD, it's like double inside and up, boom. Where's your stop? Continuity right here, doesn't get tapped. 2, 2, 2, 2, 2, boom. Liquidity, 2 to reversal, out, right? Or even out and look for an ad. It's like, okay, well, here's a potential ad, that one failed. Tight stop it. Here's another potential ad. It's like, okay, this one actually goes. Where does it go to? Magnitude, and then pivot, target 1, all these highs up here. So first partial, stops, break even, and then boom, that one doesn't work. That's second stop, get me out of it, right? I'll close my whole position or leave my swings on if my entries are down here. Doesn't matter. FAFO. So I said if you wait to find out, it's actually pretty gnarly on contracts. Fuck around, find out. Yeah. If you do wait to find out, you get kind of screwed. Which is why we don't. It's like inside 15er should go. If it's not going, then I don't even want to know why. Get me out of it. So stops on the price of options or the underlying. This is something that is debated on. I use the underlying because the underlying is what pays you technically, right? And if the underlying's not reversing, the option price still can. Because if someone sells, let's say 1,000 contracts or something, the option price is going to fucking move, right? But if the stock is still good, do you want to stop out on that? Probably not. It's up to the person. Obviously, the contract is what at the end of the day is going to affect your account value. So you need to figure out how you want to manage your risk yourself. But I have found that sizing appropriately and then using the candlesticks instead of the option price makes a lot more sense and works a lot better as far as not getting ruined by stupid spikes in the option price if you're trading things that are kind of illiquid or just really volatile, because that happens. Not the market's not perfect. I was gonna say you have balls of steel to let that ride. Uh, yeah, no. Technically, though, I did. I don't know. I think I posted it on Twitter. Let's see. Obviously, I didn't let 100,000 ride, but yeah, no, that was VIX, so it's different. Yeah, I did let it ride. This is SPY. This is from the day before, and then I think I don't know if I posted my gains from the day prior. Nah, I don't think I posted it actually. Sadly enough, I only posted my ads, but you can make that money. It's not 100,000, but it's close. All right, we got I can take any questions. Any questions? Throw them at me. It's 5:30. I know someone wanted to see me do some, I guess, analysis like for tomorrow, which I can do, but I want to get to questions first, and then we will get to that. And if you want me to just do analysis stuff, then let me know. You guys are telling me what to do here. Uh, Give me like a couple minutes. I will come back. If you have questions, again, put them in the chat. If you do not, and you want to just see me kind of go through a million stock charts, then ask about that too. I'll be back in about a minute. All right. Do you think volatility with the Fed intervening, bailing out failing banks will make for more liquidity runs and routing formations? So the really interesting thing about the Fed is now they're setting the precedent that you're not banking with whatever bank you choose. You're actually banking with the Fed, because the Fed is who has your money, right? Because the banks don't. None of the banks have anyone's money. The Fed does, right? So that's a change, because that was not what I guess the precedent was. They're completely against the rules doing all of this, right? And the other thing is, since you're banking with the Fed, no matter what bank you go to, everyone is going to go into high risk investments, because I believe SIVB, I don't know what interest rates they were offering, but I'm pretty sure they were higher. If not, then what I'm thinking is, if the Fed is going to be guaranteeing your investments no matter what bank you bank with, why would I not go with the YOLO bank, right? The one that guarantees 32% interest on my money or whatever it is. Because if they lose all my money in the market, the Fed comes in and pays for it, right? So it's not, and I've seen a lot of things. I guess I don't want to be political, but I've seen a lot of things, and people are like, "Oh, this is end stage capitalism," or blah blah blah. No, that is corporatism, right? So definitely not a good thing. And someone's gonna have to lose their money. Some banks are gonna have to fail eventually if we're gonna fix the underlying problem that we've had since I guess, since we went to fiat currency. But that's my thoughts. I don't want to expand too much on that. So do I use options flow? I do have I believe it's what, 10-day swings. If I was going to recommend any options flow places, 10-day swings would be my recommendation. But do I use it very consistently? No, they just have a pretty good record and they keep good track of stuff. They're pretty organized. For the most part, I use the Strat bot and then I use their flow sometimes. So how about your thoughts on Qs not participating in this downward move on SPY? If inflationary troubles are here, should it not lead? I'm guessing Qs is whoever is controlling the Qs is probably thinking, hey, if they're going to bail out every single bank, then the bank thing isn't really a big deal, which means all of these high risk stocks, or like growth stocks or whatever you want to call them, for the most part, they're with these banks that are offering interest rates and they're giving loans out to these growth and tech stocks that shouldn't be getting the loans, because that's the whole issue with SIVB is they're giving out loans that these people otherwise wouldn't get, and they're doing it because the Fed will back whatever they give out, right? Which I might be incorrect on that. Don't quote it, but that's my thoughts. It's like all these people that are with banking with risky banks, their money's guaranteed. Like Roku, no longer a worry because they're getting their money for sure, right? So like maybe Roku is going to go and complete this try. We looked for it today, just didn't work out. This is one I stopped out on. And again, it's like it either goes or it doesn't. This is a great example of that. But all right, analysis, we will get to it after I finish these questions. So they probably decided to pause hiking rates on Monday, which we'll find out later, see how that gets priced in. I don't think, like the Fed is really, they're being very stupid because they're hiking rates and they told the banks, they're like, hey, we're going to hike rates. And banks were like, yeah, no, you're not. Like they're calling their bluff. And then all the banks just get screwed, right? But now the Fed's going to step in and make sure the banks don't get screwed. So I don't know what the Fed's doing, but they're not doing what they should be, which what they should be doing is making things contract and making people choose things that are less risky, right? Like that's what happens in recessions. You become less risk averse, but they're not letting that happen, which again, corporatism instead of capitalism. But let's see. Smaller bank is more risky because they won't get bailed out. We'll see. Too big to fail, too small to succeed. True. For a strat trigger, do you set the entry at the trigger or 1 to 2 ticks above below? You see this price over here on the top left? We want to see if let's say we're buying bullish, let's say on Roku, we're looking for bullish prices over 61.74. We would want this bid here to be over 61.74 because they can pop it above. And when you see liquidity runs, that's not a lot of the times what happens. They can pop it above the highs. But if we don't see a nice bid above those highs, I normally just don't count it because they'll, like, especially you go on SPY, people are throwing market orders in all the time and things are just popping around everywhere. But I just want to see the bid above. And that's that's me personally. If the candlestick goes above, it's pretty much the same thing, but sometimes the bid just isn't there. Yeah, so corporatism this is the last thing I'm going to say on it, but corporatism is the end game because capital will buy out governments whenever and wherever possible. I agree that's the end game because of the way the system is, but I think we can make the system different. Because the political system we have now with the money and all that shit, like that's what ruins everything because no one can be genuine and everyone's trying to make money, right? So if you remove that and it's like, oh hey, you're gonna get your $100,000 salary, you can't insider trade, you can't take money from corporations, you have to represent your neighbors. It's like if that's the precedent set and you're just a public servant like you should be, you don't have all these extra things that you can go and make money from just because of it. Like you can go write a book about how good you are, but you shouldn't be able to be like, hey, it's like Ford, or whatever company, you should be paying me because I'm gonna vote to let you pollute the lakes or whatever, right? Like that's stupid. Sweet summer child. Well, I think it's faith. If you don't have faith in things being better in the future, then there is no future for you, and you're not gonna act like there is a future if you think it's all negative and good can't win. But curious about the Qs have been upward. The trend since January looks like a bull flag on the weekly. I don't know. I think it's just part of calling the bluff, but it's price action. So no reason to get too deep into what the why, I guess you could say. We should be bullish on SPY until it runs the highs looking at that daily chart, right? So SPY, we just talked about that. Is that an ES? Oh, did I clear the drawings? Damn it. Let me turn all this crap off. All right, so SPY, we'll start the analysis at the indices since we normally do. SPY, we had our shooter back down, bottom of the try. We have the 3 here. Now, we've been talking about 3s all day. What happened? They're back into it, right? So the second we're back into that, I want to see at least like up to this open or high, right? Ideally, we'd take out both sides of the range and go to the top of the try back here, but we don't always get that. We just want to see, can we go and reach the other side of this range? That's our next area to target. But how does that happen, or what can make sure that doesn't happen? Right here. This is still, these two are outside bar of this bar. And just like a 3-2, it's like this compound 3, right? So how do we treat a 3? Mark out the highs and lows. If we fail, we'll make this a different color so it's not too confusing. So if we fail above Tuesday's highs tomorrow, then potentially we go to Monday's lows, right? This is our compound 3 of this bar. So tomorrow it's very simple. Above these highs, which will draw the brown information, go to the lower time frame. Above these highs, we're continuation, but we're also coming into this try, which whenever you go above a high, you're coming into a try. It's just how it works, right? But if we can stay above there, we expand. And if we fall back below, then kind of like we talked about before, if we were to gap or go 2-2 reversal down, it's the same thing. Because we took out the high of the try. If this just goes 2-2 back in, technically you'll be inside bar to this compound 3, right? But ignoring that, you'll have 2-2 day magnitude back lower, right? And that compound inside bar of this compound 3 it's kind of it's a harder idea to grasp, but you have this compound 3, this big range. If this stays inside, this will be inside bar of all this stuff here, right? And the way I do it is when I'm looking at this chart, I will draw out, I'll be like this. In the morning when I'm talking about charts, I'll be like, hey, so we had this low and we went to this high. It's like, now we know this is our range. Anything within here, technically inside of these highs and lows, right? So if we start seeing action, not like this where it's really bullish, but action where it's like chop shop like this, then we know to think, hey, potentially we're going to be in here for a bit because we need to broaden this try and then expand it either up or down, and depending on continuity. But given SPY, it's the same thing. We would just want to see, can we hold above this high? If we fail it, we're outside day here. And if we fail that outside day and we don't get reversals back up, then what? We're going here, we're going here, and we're going here. And that would be outside bar of all this. If we go 2-2 reversal down, we look for the same thing. If we go up tomorrow and we can stay above these highs, we are expanding where? It's like, well, we zoom out. Where's the top of the next try? I would say it's up here. So above 393.45, as long as we can do that, or even again this low back here for the outside week, above 392.31s, we are coming back into this big outside week back here, which would mean target the high of it. And if you're an ICT person and you want to be snazzy, it's like where we ran liquidity up here, this would be where I would have an order block drawn out. So this would be the area, because anywhere in here, as long as this high isn't taken out, technically this is, you can see they boom, 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 run liquidity, drop, right? Order block is this part of that running liquidity. So if you want that, it would be right here on SPY. What, 39968. And that's how, I forgot to mention, people are asking me about how I got that level last week. I believe it's actually on ES. So people are asking me how I got this level as like 4017.25, I believe. And it's because this is that order block. You can see aggressively runs the highs and then breaks down. Draw that all the way out. that's your order block. So that's what I'd be targeting. And you can see I have it drawn out here, 3997. And I posted that this morning, which later in the afternoon, midnight open, it's like, that's an ICT thing, right? But like we talked about before, broadening formation from low to high. So given our SPY, I know I got kind of sidetracked, but given our SPY, those are the two things. We either hold above today's highs or we fail them and come back through the range. Either of those. If we go inside, then we know it's doing nothing. So let me just read the chat quickly. So like QQQ looks like a bull flag on the weekly. So this right here, yeah, but this is our try. So how does that work? It's like, well, if we go outside week this week, does it have to fall back through the try just because it's outside week? No. Only if it falls back into here and starts really, giving us signals and telling us, hey, we're coming back through. We get daily magnitude, something like that. Now, if we don't come back through the try, what is it doing? It's expanding, right? So we go to daily. It's like, okay, 3, 2 down, 2 up. You can see outside day, boom, they're expanding it over 294.43. We talked about this already. Afternoon session, they came down, tested it, failed to stay below, and they came back above and right back to high day, right? So we look for this high, and then if they're going to expand this range here, and by that I mean all these candles here, this is compound 3. If we're going to take out the high of this 3 and stay above it, then yeah, you can call it a bull flag if you want. But the reason I would not want to call it a bull flag is because bull flag gives you the bias of up always, right? And same with like bear flag gives you the bias of down, which I don't know what you want to call it, but let's say we go down here and it's like, okay, bull flag here. It's like, yeah, bull flag, sure, break out above this high. But what happens after that? It's like this moves way bigger, right? So it's like, do you want to say this is the bull flag, or do we want to just draw out this broadening formation here and be like, okay, new high, 2-2 reversal. They didn't do anything because they didn't get to reverse it. Continuation, didn't hit its magnitude. Gaps down, fucks up the time frame continuity, so they go outside. Get anyone that took these shorts here, inside bar, gap up above the 3, and then 3, 2, 2, takes out liquidity here. And then you can see the reversal. They tried to bring it back in, and then this was, I believe, like some NFP day, which kicking pattern right here, back to the top of the try over here. And it's like, okay, here's this bull flag. It's like, I don't know where you target with your bull flag. I know people look for like measured moves, like from here. I don't know how far you draw the measured move out, but I would much rather be like, okay, like we talked about before, you open the chart, where's the high and low of the range? Here's the low, here's the high, right? So here's our low and high. What happens? We get stuck inside. It's like what I talked about before. And what happens when you get stuck inside? Start new broadening formation. You get this candle here, goes 2 up in red, 2 reversal here. Daily magnitude gets hit the second day. Then it goes 3, 2, back to the top of the range. Inside bar down to 2, bottom of the range. 2 reversal, boom, right all the way to the top. That's way more important to know than like whatever downtrend line someone may draw here, or the box here, which was a failed breakout, or right here, which actually worked. Like, that's confusing. I would rather just focus on where's my broadening formation, and then do I get an actionable signal up or down from it. If we're truly looking at a doom and gloom bear market with raising rates on tech, they should lead down, not up. Well, maybe. It's like, well, if you're saying this is a bull flag, it's like, what does everyone else think? It's like, yeah, it's a bull flag. And then, okay, we'll draw it out. It's like, where's the bull flag line? Something like this, right? So if this is our bull flag line, what happens? Tomorrow we go continuation into the 3. Next day we fall back in, maybe we go inside day. And everyone's like, oh my God, it's ready for the breakout. And then what do? We go 2 up. And then that's 1, 2, 3 days. It's like, okay, Friday comes in, rev strat, because we're outside week, right? It's like big old rev strat, and no one would be expecting it. Like, it could literally just take them all out, because this is your range here and you're stuck inside and you're not going anywhere until you can expand above this high here at 304.19. which the good traders you'll see that are trading flags and breakouts and shit, they're going to be marking out the zone like this, right? And they will recognize, hey, this is our range, which this is how they'll mark it out. They'll mark it out like this, something like that, right? It's like, hey, this is our range. We just took out the highs of the range and we fell back in. They're like, okay, well, failed breakout, straight back down. People who don't know what they're doing, if you follow any of them, they're going to try and buy this retest. They're going to try and buy this order block. They're going to try and buy this rejection block, and they're going to get swamped. And that's not to say one strategy is better than the other, just a great example and how you can see that normal TA can kind of screw you up if you're not doing it correctly, which correct TA is just range trading for the most part, which is technically what we do with the strat. We just do it in a different way that gives us, I would say, better points of interest. Like Qs, how would you get low a day on Monday? It's like, well, go to your try. You had your aggressive sell at the beginning of the week, aggressively back up, and here's a hammer that failed. Here's a hammer that failed technically right here. Here's a hammer that worked. And it's like, where's your risk on that? If you're on a oneer, 48 cents. And then the second we're back above daily open, it's like potential outside week. Take it all the way back up here, right? Or even just up to here. Doesn't matter. But that being said, I think we should start looking at next day's things, right? So obviously SPY, we want to see, can we come back through this range or not? One thing I would like to mention, this level up in here, you can see this was that previous range. On ESM, we failed to get back in it. So TTO on the day right here didn't go anywhere, didn't come back into the range. So technically we're still below it, and technically this is the bottom of the try, right? So we can expand tomorrow if we don't reverse, which is why I gave you guys, hey, if we go 2-2 day tomorrow, we want to know about that because we're still expanding, right? If we're not coming back in, we're expanding. So two things, either come back through up here or we go daily reversal into here, make a new low, and 3-2, and it's going to just dump like a rock, right? Those are the two ideas. So given that, let's just say we want a bearish downside or bias downside tomorrow, because if it goes to the month on ES, we are in force on the month and we haven't hit its magnitude on SPY. Technically ESM did hit its magnitude, but we'll just say it wanted to TTO, and we still have all these clustered pivots here, which normally get taken out. And if we go all the way down here, it's like, here's the low of that range. And you can see went down, two down in green, all the way back through, takes out the high up here, and then fails it, right? So the bigger range, if we quickly zoom out, we have higher high up here, we have lower low back here, and now we get stuck. You can see nothing, takes out the high, comes back in, stuck, goes inside month, and then what? Inside up, takes out the highs, fails. We want to see broadening formation, so we want to see all these lows taken out. And given that, I would say ES, I want it down to here and down into and below this low here. Potentially they expand it. Again, we don't know if it'll expand or not. We just know I want to bias down going into tomorrow, which makes today's scanning a little easier. So how would I scan now? Technically, let me, oh, I messed up my streaming. 1 second. Recently, I've been using app.strat alerts, but we have been going through some updates, so I'm not sure if it's going to be working 100%. But going into tomorrow, what do we want to see? So since today was turnaround Tuesday, I would like to see potentially things that went inside day. Because let's say Monday sold, took out last week's lows, and then Tuesday went inside. Then we have potential 2-1-2 to continue in the direction of the week. If for the off chance we do go bullish, I would want to see things that also an inside day. Potentially we go 2-1-2 off Monday and come back through previous weeks or above previous week's highs. And ideally, if you're going to be bullish into tomorrow, we want things taken out last week's highs, because those are the things that are being bought aggressively in comparison to last week. Now, given those, we can then just scan quickly for inside days, which this should be able to do for me pretty easily. So we have Intel, JPM, Crowd. Did it not update? Let's see. I know JPM. Yeah, that's what I was worried of. So we don't have it updating right now, so I can't actually use that, but we will open. I'm gonna have to turn my screen off so you don't see my password, but we're gonna open Thinkorswim quickly. And while I'm opening this, if you miss prior day range breakout entry trigger, do you try for more advanced entries on pullbacks in the direction of trend? The simplest way, just give me a second. I guess the simplest way is just, do you still have magnitude, right? And normally after a big move, it's hard to expect another big move. Like, let me quickly do this. After. So let's say, like, looking at JPM, after really big moves, it's hard to expect more moves. So we want to look for the TTO no matter what, right? If it's close to taking magnitudes, normally they'll go and take that first and then start the pullback. But let's say we're looking at JPM. It didn't technically take out this high up here, but we'll just say we're looking at this. It's like, okay, JPM. Let's say this trigger, we missed it, and this day went down. If we just draw out the try, actually we'll zoom out a little bit since we want the whole range. It's like, okay, we missed this and there's a big sell. It's like, okay, this one, 2-2 reversal, magnitude hit, and more, right? So when that happens, we know to think, hey, aggression, right? And potential outside week happens. So once it goes 3, as long as it doesn't reverse on the day, it doesn't go 2-2 reversal, this 3 is going to expand and expand and expand, right? So we go to the daily on JPM. It's like 2 down, doesn't reverse right here, goes doji, right? So as long as it doesn't go 2 up tomorrow, we know we can short it, which means you can either short it after that day closes or near the close of this doji day, or you can just wait for the next day. And what do? Well, doji day, so they consolidated after that big move down and they didn't reverse. We know it's a 3 on the week. We know they're aggressively selling off this daily trigger here. So if we're going to continue and we're going to go for, let's say, these pivots down here, we would want to see prices stay below that low, because this is a range and we want it to expand it in the direction of continuity, which is down. So we go to a 15-minute on JPM. They open below it, try to gap fill to go and take out these people's stops or go outside bar of this, which, again, you need to start seeing these tries. Here's this compound outside bar. This is that initial consolidation that you can see. So breakout sellers killed, breakout buyers killed, and then they try to bring it back up again. This is that 3. If you draw out the low of the 3, it's just right there, right? So now they fail it, give you an actionable signal, shooter 15er, 2, 2. Let's say you failed that one. Where's your next actionable signal? 2 up 15er against bias, and we haven't hit our target yet. 2 down, 2, 2. Doesn't hit its stop, which is that continuity stop, right? 2, 2, 2. Hits our target but doesn't reverse. Shooter, add, 2, 2, 2, 2, 2. Hammer, 3. So maybe you could exit it out on that one. 2 down, 1, 2 up, hits the top of the 3. You get another 3, 3, 2, short it again, new low a day, take profit 1, and then it just keeps going. And then hammer up at the close. This is that profit taking. Everyone takes their profit on this little hammer back up before the close. And then you can see new continuity opens and then pull back, right? It's this whole day above that daily open. It's like above that daily open, you technically shouldn't be shorting it because they're buying it that day, right? Then another day opens and you can see daily open again, they're buying it, or at least they're trying to close positions. Another day opens. This was today. It's like, okay, if we were to short it, this is the one, because what? We had this move up and then all this consolidation. What do we look for? New try to form. What do we have? You see compound outside bar of this bar here, compound outside bar of that outside bar, and then we have compound outside bar of all of that taking the high of the range, which again, this is outside bar of all this stuff right here, right? So we take out the high and we have a new daily open. If we go to 5-minute, technically there's no 5-minute signals. There might be like a 1-minute. Let's see. 1 minute, 2 up, 2 down, 2, 2, 2. I called this oneer this morning. Shooter oneer, doom. Right there, right? So shooter oneer goes inside oneer, technically 2 up, doesn't hit its entry, right? Doesn't hit the continuity stop. 2 back down, this is where you can add to it. And then if we look at it, sadly, it filled into this gap. and you can see outside hammer, which I saw that and I was like, heck no. I was like, we're done, guys. And 3, 2 up, 2 up, you can see where it stops the ad. But as long as you know to be partialing at least once after your initial entry, it's like big sell on this, just partial a little bit. Add again, big sell, partial a little bit, stops break even on both. If that's going to go, and if it's going to go, it's going to go all the way down here, right? But since it didn't, break even, get away from it, because what happens? Inside bar stuck, right? And this is a beautiful one. Goes 1, and then 3 broadening formation, stuck, broadening formation inside that broadening formation, 2 down, stuck. And then right when that happened, I was like, yeah, we'll see if this can be a short. And this is all from stream today. We'll see if we can short this. Boom, it opens and doesn't do it. I was like, all right, we're going all the way back up to 133, or I believe it was 133.23 or 133.43. 43, yeah. And you can see it goes outside of this outside bar here. Inside again, 2 down. They can't get out of this range still. 3, 2, 2, hammer against, stops you out, right? It just doesn't want to do it. And then what happened? Big range here, stuck inside, takes out the low of this range. Hammer reversal up. This one would have stopped us out more than likely. Momo hammer up, and that one works. TTO, stop them out. 5 up, boom, boom, boom. Back to the daily open. And we can see starts a new try. Low here, and we look for the high up there. Partial at half gap fill. Yeah, it depends on the person. I'm just not drawing all that crap out right now. What I'm normally doing is if I'm on this 15er and this 15er fills the gap, then once that fills, if I see this big wick, especially if we go inside like this, I'm just not going to touch it. But I'm looking at like 15-minute, 30, 60-minute gaps. So if we go to like a 30, it's like here's your 30-minute gap fill. You go to the hour, it's like here's your hourly gap fill. All of those are valid. Half points of key ranges I see come into play quite often. Yeah, no, and people use completely different things for special levels and whatnot, and I'm all for it. The important part is just understanding where your levels are in context, right? But let's get on to looking at what we're looking at for tomorrow. So again, tomorrow we'll buy a short. Why not? And it doesn't technically matter what we're going to bias. And now I have Thinkorswim open. So what I do is I just scan on Thinkorswim, and it's pretty easy. I will pop this window up for you. So if, like we said before, I want to look for things. We'll look for things that are shooter on the day. So we want something that's high greater than the high from 1 bar ago, which you can draw. You can write it like that, or you can do it from 1 bar ago. And you want, let me see if I can actually just load the scan so I don't have to type it all out for you. Personal hammer shooter, boom. So I will show you guys that code. And this is some code I wrote just to show me the shooters and hammers, which I will throw it in the YouTube chat for anyone that wants it. It's too big, sadly. So if you want that scanner, I guess if you go into free chat in the Discord, you will be able to find that code if you do Control F and type in hammers or shooter scan. Should be in the free chats in Stat Trading, which again, if you want that free Discord, it's Stat Trading or stratalerts.com/Discord, and that puts you into the free one. But anyway, gonna bias bearish tomorrow, so I want to see what do we got for shooters. And I will scan, and we have a couple things. Not everything's liquid. So if we go FL Foot Locker, it's like, okay, this one's sold on Monday. Tuesday, what did they do? They failed to come back into the range, right? If we zoom out, this is how I'd mark it out. It's like, here's the low of the range, here's the high. We get stuck inside, and you can see what happens. They created a try here and expanded it lower. Didn't quite reach the highs of it, but it's a little messy. You had this 3 here, went 2 up, started just expanding up since they couldn't get back in it. You can see these wicks right here. Took out all of these highs, which you can draw it all the way back to here. You can't draw it to here. You can draw it back to here if you want. I'm going to do it something like this. 3, 2, 2 down in green, but doesn't reverse. goes inside bar down, and you can see gap below the inside bar. They fill it, and then they fail that side of the range, go to magnitude. When things hit magnitude, you want to hold the runner, because if it's hitting magnitude here, that may change the weekly to, you can go 3 on the week, right? And then potential 2 next week. So they go 3 below last week's lows, they gapped it. They are unable to get back into that 3. So we are 3-2 expansion on the week below 40.64. And what do we have to the left? We have the other side of this range down here at 36.88, and we have pivot cluster sitting right here. So this is a beautiful setup for tomorrow with day, week, and month continuity. Perfect. If we zoom out, you can see, first of all, here's your gigantic broadening formation. Second of all, that same idea, mark the low, mark the high. Now we're stuck in here. We started this try down here. We expanded it higher. Now, if we fail and start taking out some of these lows, we'll expect this low to get taken out. And what happens after that? It's like, well, maybe they do something like this and start going back to the top of this try. But technically, they're coming off the top of this try, right? So we'd almost think maybe this is lower high to go and take out the bigger try like this. And either of those ideas can play out. It just depends. Does things reverse? Do the monthly and quarterly signals give magnitude outside of that range or not, etc.? But Foot Locker, this is a solid one. Now, what do I do once I have the setup I like? I go to the options to see if it's liquid enough to trade. Which, if we go to Foot Locker, it has 0.4 spreads, so 40% spreads on the 40.5 puts for this week. If we go closer to the money, they do get a little better, but they're not that good. Now, seeing that the spreads are like 20% to 40% or 30% to 40%, depending on what you're looking at, I'm thinking probably not trade this, but where's our magnitude? Because the magnitude matters. Monthly magnitude is down into that pivot cluster, right? So the fact that monthly magnitude's down into 36.96, I want to go and look at further contracts and see, like, does any of the further ones have better spreads, and are they pricing that in or not? So if we go to like the 24th of March, better spreads, 39.5 puts are trading at $2. How much would those 39.5s be worth? Even with earnings, actually, they'd be worth about $2.68. So technically not good. Give me 1 second. I need to go and talk to someone quickly. All right, sorry about that. We are back. But as you're saying, they're kind of pricing it in. So they're not terrible. They'd be worth about $4, so you could potentially double your money if you were to buy further out contracts and hold them to expiration. But let's say you're a smaller trader, like this is too liquid for me to be okay with, I guess, telling other people to be looking at and trading with their personal money and trying to follow me, because it's like I can trade a 30% spread or even go into these further dated ones and just trade the at the monies. But the volume and the liquidity there, like if we have like 50 people in those contracts, it could be pumping, dumping, spreads widening, people getting screwed. I can't do it. But for your own studies, I guess you could say, look for something like that. So back down to like 39. And if you played the at the money puts, like the 40 puts, let's see what the delta is. Yeah, so if you go at the money, this move, if we can get it, would be about $2, which would be $80 a contract. So if you played the 40.5s in the 24th of March, those 40.5s would go from $2 to about 350, 375. And that's or actually it's like 340, my bad. But and it's like, that's a decent day trade, right? It's like, can't go wrong with $90 a contract off of this daily shooter. And guess what happens? If they really want to sell it tomorrow, then what happens? instead of 90 bucks, these things go deep in the money, right? And the second that happens, you hold that shit through earnings, because who knows what Foot Locker is going to do, right? Especially given this broadening formation way back here. If we can come back above or below these highs back here, like 32s, like maybe it gaps and just completely gets obliterated on its earnings, those things can be worth way more than you bought them for if you just leave runners, right? So this one would be a good one to put yourself in, because you have that monthly magnitude and you have a nice actionable signal, and inside bar on a Tuesday, continuing Monday's action. They failed to try and come back into the range. So I'm not going to explain every single one as completely in depth as that, because we're going to be sitting here for forever, since I normally go through a fair amount of charts. But that is FL, and I would recommend it if you can trade those not spready options. We got HIMX next. So this is an example of one I just wouldn't touch, more than likely. And the reason is, well, you have time frame continuity higher, so I don't want to be short that. Secondly, you have a broadening formation, something like this, so it's still going up there, more than likely. Third, if it's going up here, this is not an actual signal higher, right? So if anything, this one we would want to see it just TTO go 3, or TTO and set up 2, 2, 2. So 2 down, 2 up, back into the highs. And that's just me personally. Some people, they might want to trade it and be like, hey, when a penny above this high, we're going to go shoot her back to this low. And that's completely A-okay. You can do that. But I want to look for things that are weak still. Like Foot Locker, go on the weekly, it's like that one's still weak, right? That's way below this low here. And if it's below that, we want to see it to here. Very simple. And you can see it's like, here's your consolidation on Foot Locker. When above, if we fall back below those highs, way down here we're going. But anyways, beyond. I guess I don't hate it. And the reason I don't is because I'll draw the broadening formation, something like this. I'm drawing from back here because I'm saying this range is the high and the low, and this, when above the high, took out one side of the range and is coming back through this. So that's why I draw it like that, with the wick pointing out. But daily reversal down, 2, 2, 2. The only thing that I would be worried about is, oh, actually no, we took out the highs of that range, so it's still good. It's not technically stuck. Took out the lows here. I would have preferred to see this high get taken out over here, but if it's not going to, it's not going to. Still took out the high of the 3. So given that, I'd want to see it go 2, 2 back into here. But we go on the week. Week would have to change. So weekly opens, I believe, right here. So technically daily magnitude will change the weekly open to red, which is good. And sadly, the month is inside. So we are over halfway into the month. Just given that, I'm tempted to not even touch this, just because if we go to the 2-week chart, 2-week is double inside. So until they can at least take out down here, 1641, I'm not too incredibly interested. But since this daily has the chance to do it, we can still keep an eye on it. And what I mean by that is you can trade it, but I would prefer something a little bit better. And it's solely because we're still inside in that higher time frame. If we weren't inside on the higher time frames, the month and the year, then I would fully be expecting that to work out. The reason I'm not is because when you're inside in the higher time frame, once again, you start new broadening formations. And if we're looking at it, this is technically the try right now, and we actually didn't take out the high of it yet. So just not going to be touching that one. If you want to, go for it. I would trade the 17 puts. PAA, which I don't think is going to be very liquid. Ugh, this one's just a chop fest. No, thank you. CEI, energy, and this one just looks like nothing. So we don't got really much from the shooter scan. We'll see what we have on the hammer scan. And I go through all of them every day because you never know what you're going to find. So we had G Pro, which is your GoPro. So 2-2, this is Momo hammer. Outside our daily magnitude's right there. It's like 4 cents. Too small of a stock for me. We go to like the weekly. Maybe there's something interesting. Not really. Nothing here is very interesting to me. You could try and just trade it up because you have potential outside week, but nothing too interesting for me there. JPM, this one I do have a little bit of interest in. And the reason is just because of how volatile the banks have been. The one thing I don't like is we're inside week. But as far as banks go, these are always going to be on our list just going forward because they're news driven, obviously. And look at how big these candle ranges are. You're getting like a weekly move in a day. So when that's the case, great things to be trading. And the reason you can see doji stuck. What happened? It's like, well, here's your low. Where's your high? I'd say it's way back up here. So if that's the case, then we're going to start a new try. You can see higher high here, lower low here, higher high here again, failing to come back through. Potentially they try and expand it. And I would draw the try something like this. So we'll see tomorrow. Do they gap it up and drop it? Maybe. If they gap it up, I will short that thing if it goes red. But let's see. EW. Not a stock I normally trade. Same with CBOE is on there, but I don't normally trade that one either. And you can see CBOE, chop shop. Oh my God. No, thank you. Nike. I'll touch this one a bit. So yeah, technically it's not like the most terrible setup in the world. You have this small little try. I'm guessing it's potential outside week. Yeah, so potential 3-3 on Nike. Full time frame continuity. That's beautiful to see. Daily hit its magnitude, and you can see they kept above it. So they're trying to expand it. 2-2 continuation into a top of a 3, top of this try and outside week. Not bad. Now, let's see what those options are pricing in for Nike. So weekly options on, oh God, there's the liquidity just sucks in this market. Oh my God. I guess if you went in the money, the 118s are only pricing a move to 120, which technically if we go to 122, it's like they'll double. So that's good. And when I say double, I mean just based on intrinsic value. They'll go from being worth 2, which is their extrinsic technically, and then their intrinsic would be worth 4 at the end of the week if we hit 122. So you could play it. The spreads just aren't there, so I can't give these to people, sadly. But not a terrible setup. You can definitely be watching that one tomorrow. QCOM. So one thing I don't like about QCOM is you don't really have a very defined broadening formation, which doesn't mean there isn't one. It just means it's hard to draw them on the higher time frames. If we just go and kind of look, it's like, here's your broadening formation you expanded from. So potentially they try and return to that on the longer term basis, but who knows? If we just look at what we got here, we had the 3 up here. You can see it close below, monthly comes back in. So potentially the bottom of this 3 goes to the weekly basis. They're pulling back, so against monthly red continuity, although quarter, year, and week are green. So potentially, since everything else is green minus the month, this whole month might be just TTO, right? And if that's the case, then if they're going to TTO and come back through this range here, we need to be careful. We can see the week, nice sell prior, hit out some targets. Now 2 down in green here. Can't short it because it's above weekly open and still technically has daily magnitude here. Has an outside bar up here as well. So you could long it, but since it's in conflict, I would be against it personally. I'm looking for like A+ setups. So not really the best setup in my book. PDD. So this one, you can actually see my notes from prior. I want to see the top of the try over here. We drew it out, so you can see technically higher low to this, yes, but identify a range, low, high. What happened? New try. You can see new try here. They expanded the lows, traded higher, didn't take out the top of the try over here. Now we have higher low from the hammer, and we have Momo hammer tomorrow into pivot machine gun type of look, right? And then that brings us top of try. That will also bring us 2 up on the week technically. So big inside week, but since it's really green going into Wednesday, we know, hey, they're buying it Monday and Tuesday. Let's see them continue through Friday. So you can see the try a little better on the week here. 2 up, 2 down, magnitude hit. goes 2-2 reversal up, still hasn't taken out this low. So this is TTO of this weekly candle, this big one here. TTO on this week, new week opens, they're going to want the top of that try. So PDD, Momo hammer on the day. So we have our entry trigger. And also, it's like 2-2 reversal day here. This is compound outside bar of this bar. This is continuation. So these three are compound outside bar of this bar. As long as the next bar doesn't take out this low here, then technically we're continuation up, right? If they do take out that low, we would want to see them gap down and do that so we can go 3. Or if they just take out that low, the next day we'd have to see it try and come back up. So a lot of different ways. If this doesn't work out, there's always ways to get into it. So PDD doesn't look too bad. We do have earnings next week, which may mix things up a little bit, but we'll see. PDD spreads also aren't terrible, about 5% on the 94 calls, and the 94 calls are trading at $1.50. So what happens if we go to 98? Those are gonna be worth 400. So super solid options on that one as well. And that one's gonna be going on my list. So we're gonna mark this out as entry. And then these are all targets. This is ideally that last target. So look something like this. And again, just because that's entry doesn't mean I buy here and I don't use a stop loss. It means above here, this is where I want to be long. Do I take it right off the open tomorrow? Yes, but only if it opens below trigger, trades through it, and then my risk goes either to this or above it, which normally off the open, what we look for is to run liquidity within the previous day's range before trading higher. And if you traded ICT stuff, you know exactly what I'm talking about. So let's say we look at these lows here. You can see this low inside this fair value gap. If we're going to get an A plus entry, tomorrow we trade into here, and then what? We broaden information, but then this is that trigger. So what happens to the try? The try expands as long as we stay above, right? So something like that would be ideal. Don't always get it, but what we do if we don't get that is we look for initial move to come down, and then once it goes back above daily open, you long the red to green move, and you throw a stop at low day. And it either goes or it doesn't. If you go to AMD today, didn't quite have like a big aggressive move down, but you can see, boom, red to green. And if we go, I don't know, I think Roku we tried. So Roku, good example of it just not working out. And this is why we do it, because the stops are so tight. First one of the day goes red, goes green. Noted, like long here, stop here, either it goes or it doesn't. Goes continuation, comes back in, stops us out. So what, right? And you can only do it on the ones that aren't spready. So be careful of that if you're going to enter like this. But again, it either works or it doesn't. We go to AMD on the winner. Just again, giving you guys some examples. Technically went red to green right there, right? It's like, that's entry and stop. And you might be like, oh, Alex, that's really fucking stupid. And it's like, well, yes, you can say that, but I bought late because I have to stream and talk and watch all these setups. I bought late right here and my stop went here. Same shit. Boom, right? And you see that, and it's like, hold. It's going, right? So that being said, we got PDD for tomorrow. And you can then leave, you can go and mark out that liquidity that we talked about a second ago. And that's yesterday's open. So we know that's also kind of like a key level. Keep that on for sure. And you got full time from continuity. So everything we want to see. And we can swing for 106, which let's say we got earnings next week, which we do. That could be the catalyst that sends us up there. And if that's true, this would be a great clip. But let me post it. Just give me 1 second here. What is the timestamp? Sorry, I need to find the timestamp of the first one. It was Foot Locker, yeah. So 21 minutes. Oh my God. 2:24. So what, 2 hours into the stream? Excellent workshop by Alex. Uh, I don't know if I answered your question, Ray. If I didn't, tag me in premium chat and I'll get to it. All right, next. So wait for the opening juice, then long the breakout, and stop out on turtle soup. Wait for opening juice, then long the breakout, and stop out on turtle soup. Look at Home Depot. Let's see it. Uh, I'm guessing you're talking about this range here. Like this failed technically that low, and what? Maybe a 4 hour. Yeah, so you got 4 hour hammer 322. So you got 4 hour to potentially trigger the day to potentially go outside week. So technically yes, but where's your brown information? I'll draw it probably something like that. And if not like that, from this low to here. Because here's higher highs, this would be lower low to any of these lows in here, or you'd say this is lower low to this. Just depends on who you ask. But it's the same idea. We want to see these lows get taken. So given that on HD and your full time frame continuity down, I wouldn't take it. I would say, looking at it, if it goes to continuation tomorrow, you can short that, obviously, if you get lower time frame entries. Or we have this try here. Look for it to go to the top of the try, short above these highs with 5-minute actual signals. Take it lower. On PDD. Wait for an opening juice along the breakout and we'll stop out on turtle soup. And that's the difference, is I wouldn't consider it breakout trading. On a small time frame, technically it is, but technically everything breaks out of everything, right? Because if you have this daily candle range and it's going to go 2 down, it's going to break out of that previous candle's low, right? So people can argue about it and you can say what you want, but technically, yes, it is breakout trading on a small time frame. But if you're doing it correctly and using your smaller time frame entries and stops and everything we know about, you're going to be shorting breakouts that most other people would be buying. And that's just kind of how it works. Answer it in the YouTube chat. Thanks. Okay, perfect. All right, now we got PDD. Let's see next. TXN, which is Texas Instruments. So outside bar aggression, potential Momo hammer, full time frame continuity, potential outside week. So technically you got percent of magnitude. The month is inside. I'm good. No, thank you. Plus TXN, I don't trade it. Just go. Got a buddy that works here. Let's see. And mother bar, so 2 down, inside bar, and then you get mother bar because this bar goes inside, and then this one gap down, messes up that time frame continuity, goes green back into the range, and like we talked about with mother bars, you look for new highs. So more than likely takes out 231.90, but magnitude isn't there for me. Now, let's say if we're looking at it like this, it's like, okay, well, maybe like if we get really lucky, it goes and it takes the top of the try, trades all the way lower, and then gives us an entry. It's like, okay, I would take that, right? But besides that, nah, I'm good. And if we just kind of zoom out, you can see you get stuck inside, creates this 3 right here, takes out the high, takes out the low, takes out the high, takes out the low, takes it out again. Smaller try because it gets stuck inside these highs. Takes out the low, takes out the high, gets stuck again, takes out the low. Now, I would expect this one to take out here and here. It just makes sense. Hershey's. 3-1 hammer, full time frame continuity. Beautiful target sitting above. 244. It's really just going to depend on the options for this one and what that hard time frame is starting to look like. So things that are just grinding into all-time highs like this, can you trade them? Yeah, but more often than not, do they come off the highs? Yeah. So in this case, I would say draw that broadening information on the week from back here, because you can see here's your try, right? Very simple. Made this higher low because it took out the inside bar one low and then 3 and 2 up. So that reversal gives you the signal. But and then this 3 gives you, hey, new try inside here, and then it stays above here, and you're like, oh, it's starting to expand. And then it goes back to the top again. But I would draw out your try, and I would say, yes, you can long this, but top of this try, definitely be friggin' careful, especially when there's all these financial things going around, right? Just makes a lot of sense. So also, that week is already 3, so this needs to get out and stay out. It needs to get above Monday's highs, and it cannot come back in. Comes back in, you cannot be long. But Hershey's not bad. Let's see the options. Terrible. All right, on to the next. And the reason I look at options second is because if I'm looking at this and I'm like, oh, this is the best setup I've seen in like 2 months, then even if the options are 15% spreads, I'm playing it. And a great example, since we're just going to talk about it quick, if we go to W day, this is a fat minute ago. Oh, God. Oh, how long ago was it? It was not 2019. I believe it's right here. So, like, for example, was it right here? Yeah. So weekly trigger. So this was a weekly trade, and we took it from here into this high. And I think this is on my website, which actually I took down. But we took it into all these pivots up here in one day from here to here. And if we look at W day, it's like, why would I want that? It's like, well, we go to the week. You can see pivot, machine gun, hammer on the week, and what? Potential outside month. And why is it potential outside month? Inside bar, mother bar, doesn't take out this low, comes back in. Definitely want to take out that high if we can get up there, right? Which it didn't end up doing, but again, with that kind of metaphorical truth, believing that we're going up here, right here, got us this whole move, right? So that being the case, you go to 4 hour, you can see gaps down, goes green, potential outside bar of this. It's like the second it goes green, you can see it goes red to green right there, boom. And then the second 4 hour inside does nothing. But just having that idea of like, hey, weekly hammer, gap down, potential 3 on the 4 hour, beautiful attempt to long, monthly potential outside bar, weekly pivot machine gun, all of those 3 things add up, and I'm like, yes, I want to long this. And then you go and look at the spreads on W, and they're 20%. And I said the morning of, I was like, well, these spreads are shit, but the 315 or 320 calls, they're trading at like $1. I was like, guys, even if this thing doesn't go where we want, those will go to $1,000. Like this is the best trade we're gonna have in a while. And lo and behold, the 220 call or the 320 calls go $10 in the money, right? I didn't get to quite hold up there. I think I sold for like 7, but besides the point, that's why I don't look at options before looking at the charts, because you're going to miss things if you do that. And although staying on the super liquid stuff is always a great idea, some things you just don't want to miss, right? And that being said, let's get on to the next. We got KMB, which is another one I just don't trade. So nothing there. MO, which is, I believe, something to do with cigarettes. I could be wrong. 3, 2 down hammer, potential 2 up, easy magnitude. And this is all stuck chop shop, right? So technically, you could just take it. Why not? You're not going to be able to take it much further than 50 cents, though, because you go to the week, you are inside. If you go to the month, you are inside. Go to 3 month, you're not, your mother bar, and you can see inside bar, 2 up, 2 up, just not doing anything, stuck. And just looking at this, I would say retest these highs on MO, and you can see, you're going to see what I mean in a sec. Here's your broadening information, actionable signal, zoop, look for it up there, look for it to retest these highs, and then rip back through this whole broadening information like this. Because we know those inside bars, they start tries, right? And you can see they're starting one right here. If they go and complete it and give reversals up here, take it back down. But can't do that yet. EDU. Ooh, very interesting look. You can see broadening formation every time. And how did it get stuck inside? From this low to this high, you can see it gets stuck inside, broadening formation, expands it down, still stuck inside this stuff here. Takes out, actually doesn't take out that low, still stuck inside, starts a new try again, makes a higher low, still higher high to these highs, so still broadening formation, lower low, TTO'd, and then gap in reverse, bottom of the try, finally took out this, and we're still stuck mother bar to this stuff. So if we're mother bar on the bigger time frame to all this try, we should just see it back up into these highs. Pretty simple. Go to the week, we had 3, 2 down, and you can see what happens when it doesn't stay outside of the 3, comes back in. Next one tries to expand that 3, comes back in. Daily hammer, back into a 3. I'm kind of interested in that, right? The only thing I'm not interested in is I know these spreads are going to be horrendous. There's no way. Yeah, 44% spread on the at the money calls. I am good. Yeah, even the further. Yeah, nope. I'm all good. You guys can fight for pennies on that one. TAL. So another EDU stock. I believe there's some type of China news, or was it earnings? There's definitely something here. Yeah, it says further repurchase for 300 million to, oh, so 220. So they just move their money around, I guess, some investments. So still, same thing goes. You'd want to see it come up here. You trade shares, you can go for it. And you can see they're doing the same thing. So knowing that, you want to take the one that's stronger, which this one is obviously weaker by a good bit than this one. Also, it already went outside on the month. So daily hammer back in, you just go outside again. But nothing really there for us. So now next one. I know this is going to take a long time, and that's what I was saying. Like this, I go through a ton of charts. So next one, we're just going to look for 2 up in red and 2 down in green, and that should get most of the market. But we'll do that second to outside day. So what went outside day? All the oil names. APA. Outside on the day, PMG to the upside. Mother bar stuck to, you can see if we just look at our range, they're stuck inside here. So can they technically come back up? Yeah, but I don't really want to long it right now. Let's see. So great example. Let's look at oil. You can see chop shop, right? Creates a new try. We want to see this thing ideally to get out of the chop shop, it needs to take out this low and come back above. And then it's like, took out that side of the range, or even these lows here, doesn't matter. On CL, the reason I'd want it higher is like, yes, top of this try here, but zoom out a bit more. So technically sure on the year, only if that goes in force and stays in force. If it fails, it goes outside here, right? And technically we did not take out these highs yet up here. And the reason that's important to me is because outside on the 12-month up here, and you can see, what did they do? Expanded the try out, it came right back in. And did those go negative? Yes. Why'd they go negative? Well, where's your liquidity over here? $9, right? Doesn't matter that there's news associated with it? No, not really. Where did they run liquidity? Very fucking obvious, right? And you go to TAL. Where did they run liquidity, right? It's like very, very obvious. It's the same exact thing no matter what the prices are, even if they're negative. But that being said, we'll go OIH. So outside bar OIH, outside bar APA, GME is outside bar, which again, they show aggression. It's like outside bar here, aggressive downtrend. Although it might not look like much, if this thing takes out that lower part of that outside bar and stays below it, where's AMG or GME going? It's going way down here, right? So that could be the thing that starts it. And if you look at a lot of big downtrends, the outside bars are definitely a part of it. You can see a big 3-2 right here. They retest, they couldn't come back into that 3. Inside bar down, 2, 2, 2, 2. Inside bar down, 2. Inside bar down, 2. And then it starts grinding. You see hammer, 2 up, magnitude, fails it, shooter, 2, 2, 2, etc. Goes all the way down. So this is TTO. This is magnitude and target much lower. So you could be looking at GME. Personally, I'll keep it in mind, but I'm not going to make it on my list since there's no actionable signal technically. PAA, another oil stock that's outside. So when you see a lot of things that are doing the same thing, you want to see what are they doing on the higher time frames. We got APA. Month is 2 down. Quarter is just going 2, 2, 2. So 2 down, 2 up, fails to hit magnitude. 2 down just triggered. And we got a couple more weeks left in the quarter. If we zoom out, where's this one trying to go? Technically, it's trying to go up here. So given that, do I want to short oil tomorrow just because of the monthly? You could. It's like if this goes shooter, this is a shooter outside bar in APA. This can go shooter 3-2. You could look for it to try and take out monthly magnitude, but you'd need to see all of them do it at the same time. So you'd want to see APA, you'd want to see OIH do it. XLE potential shooter back down. That one looks decent, right? So as long as the energies can all go at the same time, that'll be simultaneous break across a couple of them, which is OIH, APA, and PAA. There's also what I think UNP. Yeah, so another outside bar, UNP. CF, I'm not sure exactly what they do, but another outside bar. So it's like you will get some simultaneous breaks for sure. FLR, another one. They all look the exact same, right? Big outside bar, this is where the expansion can start. And if we look at FLR, that's really interesting, right? Here's your try. It's like, yeah, took out the highs. Did it fail to go back to these lows after reversing? Yeah, but took out the highs again. Did it fail? No, they're coming right for it, right? And that's why, again, you just need to believe that it's going to go both sides of the range because that will pay you the most money. And you can see 3, that starts the downtrend. 2, inside bar shooter. 2, 2, 2, 2, TTO. Look for that 3-2 into the bottom of the try. And then if it fails and comes back in, you just go 3-3, right? But zoom out, let's see it. Took out all-time lows. So another thing, I believe that this is TTO on the higher time frame. But given that, I would watch your favorite oil ticker tomorrow. I know I normally watch Oxy. You can see that one's a bit stronger, so probably not going to be the best. OIH or APA are probably going to be the better ones. You got to pick one that has a good spread, but I'll just put down oil for my list. All right, let's get the things that aren't oil. eBay. So eBay, this was a swing from Sarah actually, and this is a great example. We can talk about it. Go to the monthly. You can see new month opens, but do we have to wait for that month to enforce? No. Weekly, inside bar to trigger the month, because inside bar magnitude, if it gets out of there, is to trigger that month, right? And we know weekly triggers right here. You go to the daily. What do we look for? We want to see TTO. What happened? We went 2 down, 2, 2. This one didn't hit magnitude, so they didn't stop out these people. They just stopped out these people, right? So what do we look for? Daily reversal. We want it to get back below that previous day high so we can go outside bar, compound outside bar of that day. And then what? This is compound outside bar. This turns into compound outside bar. And then this one actually would have turned this into something like this. So like this would have been that outside bar and then potentially fails back in, but this reversal did nothing, right? So they didn't create a swing low here because this went outside. So this is still expanding that 3 because these two are compound outside, right? And then you can see expand 3, another outside bar, expanding that 3 still because they haven't put in any lows down here. And that's why the broadening formation is important, because once you get these ones, it's like they're just going to expand and expand and expand until they hit magnitude, which on eBay, where is it? It should be blatantly obvious. Down there. Oops. Right down here. And you obviously have intermediate targets because we know if this is our range, they like to start new broadening formations, right? And that's why you have intermediate targets, because although we believe it's going down here, we need to have a target before that just in case. And but another outside on the day, bright red on the month, bright red on the month, pivot machine gun on the month as well. And you can see how all those things line up together. And you go to a 3 month, potential outside 3 month. So this is just potential 3-2 day into, hey, everyone's selling, right? So eBay, you can keep it for continuations. I'm just gonna skip the names I don't know since this is starting to take a bit, but there's like CMCSA, DOW, HON, NTAP, RH, WBA. I'll look at. And so WBA, another great example. You can see high, low gets stuck inside bar, 2 down, 2 up, compound outside bar, 2 up fails. Where is it going to go if it fails the compound outside bar at the top of this high? It's going to go to this low. And then what happens when you take that low out? They expand, shoop, all the way back down to liquidity. And then if they stay below that, where are they going? Pivot, 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 right? So technically, let's see. WBA, I wouldn't want to short it tomorrow, but if we do have upside tomorrow, we can short it up here and look for a back down. So I will throw that on my thing. CF. I already talked about that one. NCLH, I like trading that one. And so this is another pretty decent example. You see 3, 2 up, 2 up, 2, 2 back in. So this 3 is this whole entire thing. And then once this goes reversal, this is your 3. And you can see it 2, 2, doesn't get stuck inside. 2, 2, 2, other side of the 3, expando, 2, 2, 3, TTO. And shows aggression. Where's your next low? Way over here, way over here. If we zoom out on NCLH, very similar to Boeing. So given that it's very similar to Boeing, these lows could be just, we could just take out this one and come all the way back through, right? Just because we know this thing is inside. We have the high, the low, this is all inside, all of it. And you can see how that works. They created the high, consolidated, expanded up, created a new high, and then they started fulfilling the broadening formation, and they expanded it out. And obviously, I'm not the best artist, but we would look for this one to continue, more than likely. The only thing is I'm probably not going to keep it on my list, but you go shooter on the month, and you can see 3, 2 up, fails. They fail again at the top of the 3, TTO, these people and these people here. Or they go, you can look at it multiple ways. You got outside bar here of this bar from monthly magnitude, shooter on the month back through, and this is your magnitude, and then here's your 3s. So something like that. But again, 3-2 continuation, you can play it if you want. AAL, very similar, and this one I actually want to play because we're starting to expand this try, and because we're starting to expand this lower, I'm just more interested in it. And if we go to the month, it's inside month and down, right? So we got 2 weeks for this month to reach 1253 before we get mother bar potentially. The reason that's important is because if we're expanding this try, we want it to expand, right? We don't want to get stuck in this range still, because this is, if we're expanding the try, this is still this high right here. This high right here in the try, this is higher high, this is lower low to this low. And this is only higher high to smaller price action. So if this doesn't close below this low, this is still, no matter how low that low goes, this is still the bottom of that try, right? So once a new month opens, that new month can just come back through into the try if we're not expanding outside of this candle here. And what you can see is kind of an example of that. 2-2 month up. Let's say you took this 2-2 reversal short, new month opens, and they just come right back through, right? And although this one's not inside bar on this candle here, it's inside bar to this bar. And you can see inside bar up, fails, comes down. We want it to expand below this low. New candle opens, they fail to expand below it. And they come all the way back through, take out these highs again. So want to see that happen quick. And 3s obviously are aggressive. So I will keep that one on watch. And AAL, I already know the options are well priced because smaller stocks normally are. They just don't really price in the really big candles like this or these ones here. Play. You see the same thing, just outside bar, puking on the week, and where's this thing going? Ooh, this one's actually a little bit of a tough one. So zoomed in view, here's your high, here's your low, you get stuck, right? Technically, this one didn't create a broadening formation because this is all inside bar, and this started expanding it. And the reason I'm confident, or pretty close and confident, yeah, so you can see right here. 3, 1, 2, boom. Not inside anymore, right at the top of the 3. And this being a 3 is why now it's really easy to understand where we're trying to go. Because we're failing up here. We TTO'd the month, and you can see we TTO'd this bar, which is acting like a mother bar right now to these candles. So we'd look for outside month, and then pivot target, and then if they want to go for more range, it'd be down here. If they're going to TTO to go higher, it's like, here's your 2 up month, here's your 2 down that hit magnitude, which was like nothing, right? So that's your broadening formation on the 6 month, and it'd be like this and like this. So if we go to like a week, you can see our highs up here, and you can see slightly, just very slightly lower lows right here. So just because they trade aggressively through this low, like let's say we go all the way down here, they pop back in, you just target right up here. If they can go lower, then simple, down to those lows. But I'm not 100% sure on those options. Let's see. Play options freaking suck. All right. There's a couple more. The only one that's interesting to me is Dish. And again, these are all outside days, so it's the same crap. Reset view. So Dish, great example of that idea I was talking about before with the metaphorical truth with the gun. We believe when we take out this high and start reversing back in, we're going to this low, right? And anyone, if I told someone at 80 bucks on Dish in 2014 that we're going to 10, they would call me fucking stupid, right? But what happens? If you draw out your high, all the way down, inside and down, they go and TTO that one. So that entry just doesn't work. 3, aggressive, right? Back into the range. 2, 2, 2, target 1. Inside bar, 2 down, TTO, right? Goes back to new low. So we have new high, new low. New high again, way below our entry. So that one's still good. And it's still going down here as long as we don't expand out of this try upwards, right? And if you're an ICT person, here's your order block. Inside 3, 2, doji. So next week needs to come in and do it. 2 down, target 2, 2, 2, right? But if you want to short at 10 and take it to 9, take it to 1, you can. Personally, I want to go with some bigger stocks. So now that outside days we are done, we'll go to the next scan, which is going to be the 2 down in green, 2 up in red, which looks like I do not have it set up. So this is simple. I'll show you guys how to do it. So we look for a high that's greater than a high from 1 bar ago, and we want the close to be below the open. Now we'll give us 2 up in red. And there's 185 of them. So yeah, it's like banks tomorrow. What did they do? Potentially back into continuity. And I posted a lot of charts. So I know JPM, it's like either it expands or it comes back in. I know we talked about that one already, but posted a lot of charts. And if we go to XLF, now that you've seen me and seen what we're trying to talk about here, that metaphorical truth of we take out both sides, it will definitely be useful, right? And if we look at XLF, it's not quite doing it, but potential 2-2 year back into this 3, right? So we need to lose below that 3 candles high to go to here. And then what happens if we go to there? It's like, well, we've lost now these previous highs that we gained prior, right? And you can see they've TTO'd, they created 3 here, they went 2 up, and then another 3 to go and do this broadening formation. Now we expanded it higher. If we fail back in, we are coming back down to $3 on XLF. So keep an eye on banks for the next couple of years for sure. And honestly, a couple of years is a stretch because you can see 3 shows aggression, 2, boom, takes them all out, right? That's what a pivot machine gun's useful for. So looking at this, do we have a pivot machine gun? No. But do we have financial collapse potentially around the corner? If we trade below 30s aggressively, then we do, right? And that's all we need to know. We don't have to know anything about the nerdy stuff. But yeah, keep an eye on XLF just for, in general for the next couple of years. FAS. So financial direction bull ETF. What's this one trying to do? 3-2 expando, right? It's like, where's that one going to go if it's going to go anywhere? That one's going to go to $1.50, right? And what's it doing on the week? Potential 3-2 expando. What's it doing on the day? 2-2 reversal into 3-2 expando. I want to know about that one. And FAS spreads are good. Let's freaking do it. Oh, actually, they're not good, but they're not terrible. But given what we know about the threes and what we know about if we get under 49.39 and stay out, then I'm all about it, right? And we can go further out and maybe the spreads get better. Yeah, so 21st of April, 56. Oh my God, these puts, they're obviously pricing it in, but are they pricing in $60? No. We will see. And again, am I saying we're going to collapse? No. What I'm saying is we have daily reversal. We have 3-2 on the year, and this is the bull ETF, right? 3-2 on the year. Bulls are about to get expandoed to the downside. So 3-2 on the year under 49.39. We know for a fact we stay below 49.39. These targets are probably going to get hit, right? And we have to act like we know for a fact, because if we don't, then we're not going to trade as if we know, right? So FAS, April 21st, 56 puts. Why not? They're trading 6% spread, and they're 525 by 560, so they're expensive. Ideally, if you wanted to play this, I would do spreads. I'd do like the 40 put and the 20 put, and I'd go like 2 years out. But I am short-term trading, so we're not going to be doing that. All right, next. Again, there's a ton of stocks, so eventually I'm just going to have to get off and eat. But this is what I do almost every night, except the way I do it is I will show you right here. So I guess we'll actually end it off here just so I can, get some food in me and start winding down a bit. But the way I do it is this. So I scan on the left with Thinkorswim, and I do it on my watch list because I save all my scans as watch lists. So if, let me do it right now, actually. So hopefully you guys can see my screen here. So I put it as a watch list as my 2 up in red. And if I click through it, I can see, if we go to like a daily chart, I can see everything I need to see. So I'll sit here and I'll just tab, just all the way down, and eventually I find something I really like, right? So I'm going to be doing that for the rest of the night, but hopefully you guys enjoyed this stream. It was one of the first ones I've done in a while, and I know I've been on here for like hours. My voice is starting to go. But I will answer a couple of questions, and then we're going to have to end it off. So when do you use entries on the 4-hour? If the 4-hour triggers near the open, or if the 4-hour triggers and I want to be long or short, whatever the trigger is, obviously you need to have actionable signals on the higher time frames and magnitudes on the higher time frames. But for the most part, I don't really use the 4-hour that much. I use it for trying to identify intraday bias because it's very useful for that. Obviously, like today, doesn't work every single time, but it is useful. And let's say going into tomorrow, it's like you do have a hammer 4-hour, and we talked about it. It's like if they can stay above yesterday's highs, we can expand through this try, right? We know that for a fact. The only thing is we have that red month, and the week is only green from here. And we have Tuesday, it didn't really do anything. So it's kind of 50-50 in my opinion. So when do you look for kicking patterns? You can scan at night and you can scan in the morning. I'm not 100% sure my gap scan works at night, but what we do is, or what I do personally, I'll just show you quickly. being too nice. All right. What I do personally is this. So when you're looking for a kicking pattern, it's really easy to scan for because we just want something that closed about within like a percent of the highs. So we want close times 0.99 to be greater, or actually, let me think. Close, yeah, no, it's actually times 1.01 to be greater than the high. And we want the open to be near the lows. So open times 0.99 to be smaller than the low. Because if 99% of the open price is below the low, it's really close to it, right? And if 101% of the close price is over the high, the close is close to the high. So that's my scan, and it's really simple. So I don't want to give you, I guess everyone knows my name at this point, so it doesn't really matter. But let's do this. So given that, you just scan like this, and then you have mark percent change. So what we look for is in the morning, this mark percent change will show you the overnight change. So in the morning, since this is scanning for bullish candles that open near the lows and close near the highs, right? So at the morning, it's like, here's your list, and you can sort them by whatever you want, but you just sort them by mark percent change. So if this is scanning for big bullish candles, which let me pull up like ZIM to show you. It's like, okay, big bullish candle on ZIM, closed near the highs, open near the lows, right? Now, tomorrow, if I see like negative 15%, I'm like, oh shit, like they got really screwed over overnight, right? And then you just go in there and you short it at the open. That's it. And then you want the bearish one, you just do the opposite. You'd look for the open to be within a percent of the high. So open times 1.01 is greater than the high, and close times 0.99 smaller than the low. And boom. And then we don't have much that went super red today, like Piton, sure. Oh my God, did I close my Piton shorts? I did. Oh, I just noticed that. That's really sad. That's really friggin' sad. I shorted it on Friday last week and I closed them. But speaking of Piton, that one sold yesterday, went continuation. And this one has a beautiful broadening formation, and the puts are really cheap. So I'm probably going to re-enter that one tomorrow if I'm allowed to. But yeah, so it's going to 660. If we go to Piton here, we go to like 14th of April. Like, look at the 10 puts. They're 81 cents. Those are going to be worth $400 a piece at around 650, right? So super, super cheap options, and they got time on them. So if Piton goes to zero, then you're going to zero with Piton, right? So I would keep an eye on that one. I'll add that to my list, or I'll just, yeah. But yeah, so showed you guys how to do some scanning, and I explained a lot, and I hope it cleared up a lot of things for people on my Twitter, because I know it's like the strat's different and not everyone trades the strat and blah, blah, blah. It's hard to understand, but it's really simple if you think of it in ranges and the signals and expanding, right? Those are really the three things I hope you guys learned if you were on the stream the whole time, which I know is long. But I will answer the rest, and then we're going to be done for it. So TOS scripting to auto-execute an option purchase off the breakout and underlying in the video that made it way back. So I haven't been using that recently solely because I didn't save the code. Like, I got a whole new computer and I didn't save the code, so I'm going to have to watch my own video to set it up. But that is one thing I have on my plate. I definitely want to set that up so everyone using TOS, like, we can all hit the same entry, and then once it goes in profit, I can be like, here's the script, you can go and do your job, right? So like that's something I definitely want to try and set up and get working for everybody. But it's 7 o'clock already. I'm not gonna be able to do it tonight, and I have way too much crap going on. But do I do it? No. Do I want to do it? Yes. Will I do it in the future? Yes. What's the code for the 2 up in red scan on TOS? If you zoom back in the video, you'll see it, but it's literally this. So 2 up in red, you want a high that's greater than the high from 1 bar ago, like type it out like English. And you want the low to be greater than the low from 1 bar ago. And you want the close to be smaller than the open, so it's red. So I'll throw that in the YouTube chat for you. Any chance to start streaming these post-trading day reviews and scans a little more often? Definitely learned a lot in this one. Yes, and that is one thing. I don't want to announce anything yet, but that is going to be a big part of what is going to come to Stat, because we'd love to get more people and have more people learn more stuff. So no reason not to. The only thing is, like, again, it's busy, and like this stream, we're on hour 3 already, and I probably could go for another 2 if I didn't have to eat and stuff. But yes, there will be more stuff outside of trading, and there will be also some more guided educational type stuff, which I have to make some slides and informational stuff for that, but it is coming. So yes, thank you. Yes, you are welcome. So hopefully I answered most of you guys' questions. If you have any more, then you can throw them in the comments on this video, and it'll be something we address in a future video. But until then, I hope you guys have a good rest of your night, and hopefully we can have a good trading day tomorrow. And if you want the watch list, I guess I'll post, if you join the free part of the Discord, I will post the watch list in there. And I guess until then, I'll see you guys in the next video.